Warm welcome for grand marathon session of Pepper 16 Strategic Cost Management. Myself, Mohd Asthaf, Faculty for Strategic Cost Management. So today we are coming with our grand marathon season. And yes, today I am here with the session for Paper 16 SCM. I know majority of friends are now just below 10 days for your exam. So you are in a position how to crack this SCM paper. Definitely, unlike other paper, you will have a big question will be there. So lithium, we have a lot of topics are there. So how to go with important topics and practice? Yes, we are going to discuss all the important topic for your exam day up to the completion. So we will complete after going through all these important topics. So whatever maybe the time we are going to take, we won't bother it. We are going to complete the entire topic what is required for your exam, and you want to ensure you are scoring 70 plus in this exam. So hope all of you are ready. Let's start. So before starting a small introduction, I believe that hope all of you gone through with our webinar session I conducted for SCM, where I have discussed a chapter-wise weightage for each topic, where I have also highlighted strategy you have to take for SCM, which we have already conducted on, 13th May evening session. This you can get through either our NG Home Connect website or you can get through our YouTube page where we have already uploaded this session. So, my dear friends, you please watch this YouTube upload which we have done. If anyone of you missed it, it's just a 10 to 15-minute session where you will get what is the strategy you have to go for it. In marathon, we are going to practice. So if you want to get some strategy, which chapter is important, how to practice, you can watch this video. I am putting that in description also. You can watch after the session completed for SEM. In this marathon also, I will try to tell that some points of the strategy when we discuss in the marathon also. So hope all of you are ready. Let's start with the marathon session. Are you ready, friends? So no other further discussion. We have limited time. So no further talk. We are directly straight away going for the first topic. Are you ready? So my dear friends, now we'll go with directly to the problem. So we are going directly the immediately previous year question, which is came for December 24 exam. So let us start question. My dear friends, for the CMA file, as you know very well, now 14 mark questions are coming. These type of questions are regularly coming. So let's start. Gintech Limited, a manufacturing company using the budgetary control and standard costing system, manufactures a product for which standard selling price is given. So this is the standard data they given: material, labor, variable overhead, fixed overhead, total cost, profit, selling price, everything. The budgeted period company could produce and sell only 8,000 units as against the budget of what? 10,000. That is actual production is what? 8,000 only. Though budget is 10,000, actual production is what? 8,000 only. This is what actual. So company profit and loss account is given, which is actual data, material, wages, variable overhead, fixed overhead, sales. 4,000 hours were lost due to power failure. There is no opening or closing work in progress. They are asking us to find out all the variants: material, wage, variable overhead, fixed overhead, sales, etc. They are not specifically telling which are all the material variants. We have learned that material usage variance, material price variance, material cost variance, material mix, material yield. So they are not specifically tells. In such a case, how we have to approach, my dear friends? We have to find as much as variance which can be traced from this question. So if you go through this question, it is very clear that we have only one set of material. So if you have one set of material, we don't have no mix and yield. We will have only what? Material usage and material price variance. Then cost obviously we can find out. So next they are asking us to prepare a reconciliation of actual profit with a standard profit. They're asking actual profit with a standard profit. So hope all of you are ready. Let's start. So we are going to start with first material variance. So hope all of you remember that format. For the benefit, I'm just discussing the format very fast. This is for only one variances. So we have standard quantity into standard price will be 1. then we require 3 only. What is 3? Actual quantity into standard price. Then we have 4. We have actual quantity into actual price. My dear friends, 2 is relevant only when we require what? Yield and mixing. We'll start the game. So let's start how we have to approach. So hope all of you are ready. Let's start. Okay. Any question, my dear friends, this actual cost of material consumed. This is what actual cost which will be given in the question. You can take directly. This is the actual data. You have to understand actual data generally will be given. See, this is the cost, rupees. So the cost is directly given. You can take directly the amount, which is 3,96,000. So this is which will be given directly. You might have been learned in your regular class as many questions on like this, which you can get directly. So my dear friends, you can post the video or you can parallelly try to solve the problem and you can check the answer. That will boost your confidence. I'm giving small gap or you can post the video so that you can able to boost your confidence. Now you should find out what is your actual quantity. Actually, everything will be given in the data. So can anyone tell me what is the actual quantity? Yes, actual quantity which is given in the bracket, which is 16,500, which is 16,500. It has to multiply with what? Standard price. Standard price is what? 20 rupees. Standard price is what? 20 rupees. So what you have to do? 16,500 into 20 rupees. Now we have to go for standard quantity. My dear friends, any type of question, standard quantity will not be given in the question. So we have to find out standard quantity, nothing but standard quantity for actual production. They will be given actual production. You have to multiply the normal ratio input output with your actual production. Actual production, they said very clearly it is 8,000. So the input output is what? For every one output, you require what? Two input. You have to multiply with it 2. So 16,000. So you can able to get the answer 16,000 into 20 rupees. So here also standard price clear. So now your answer is ready. You can go for each data 16,500 into 20. Now whatever the variance you want to compute, you can compute. If you want material usage variance, it is 1 minus 3. So you can take 3 lakh 20 minus 3 lakh 30. So you are getting 10,000 minus. So 10,000 minus, we'll put what? 10,000 adverse. We'll put what? 10,000 adverse. Next, going forward, material price variance, which is 3 minus 4, which is 3 lakh 30 minus 3 lakh 96. What you will get? If I am not wrong, 66,000 adverse. Correct? 66,000 adverse. Now you can go for material cost variance, which will be 1 minus 4, which is 3 lakh 20 minus 3 lakh 96. You can do another way, 10,000 plus 66. That is also both are adverse, so it will be added. So it will be 76,000. So either of the way you will get it, but you will get the correct answer. Hope all of you are clear. Now we'll proceed for the next part. Next we'll go for wage. My dear friends, if you go with the wage, you can able to get that there is a 4,000 hours loss due to failure. That means there is a idle also. So if it is a idle is there, you have to find out the idle also. So let's start. I know all of you aware about idle. When there is an idle hours are there, the efficiency will change. You should not take a actual hours for efficiency variance. You have to take net actual hours. What is net actual hours? Actual hours paid minus idle time, which is called as actual hours worked. For efficiency, you have to compare standard hours and actual hours worked. So there is a slight change in the format. Normally, if there is only one type of employees, SH into SR, you take AH into AR, SR, which is point number 3. Then we will have AH into AR, which is 4. This is the general formula. We have efficiency and we have rate variance. But in this case, we have idle time variance also. Because of the idle time, for computing the idle time variance, we will have 3A or 3B, whatever the name you call, net actual hours into SR. It is NAH means what? Actual hours worked. AH means what? Actual hours paid. Whatever the shortcut you learned, you can use. It's not a problem. So let's start, friends. So how we will start? We have only one type here. So already this actual data is available with us. What is the actual data, friends? Actual data we have Actual wage is what? 3,46,800. 3,46,800, which is your actual wage. So which is given in the question already. Now we have the hours. What is the actual hours? For paid, you have to take the actual hours, which is 1,70,000 hours. So you have paid 1,70,000 hours. What is the rate? Your standard rate is 2 per hour. So you have to take that. Now you have to find out your actual hours worked or NAH. How can you find out, my dear friends? In these 1,70,000 hours, you have to reduce your ideal hours, which is 4,000 lost. So 1,70,000 minus 4,000, you will get 1,66,000. You will get 1,66,000. This is your actual hours worked. Because 4,000 hours power failure, employees is not worked at all. So 1,66,000 into 2 rupees is the wage rate. Now standard hours we have to find out. Just like how you find out your SQ. Standard hours for actual production. Your actual production is 8,000. For every hour we require 20 hours. So you require total will be what? 8,000 into 20. You require 1,60,000. 1,60,000 into standard rate 2. So this is how you have to approach. This is how you have to approach. So hope all of you are clear. So now you got this data. Data is ready now. Now you can approach each one. What is the each variance? Labor efficiency variance. Generally, labor efficiency variance 1 minus 3, but because of the ideal here, we have to go for what? 1 minus 3b, which will be 3,20,000 minus 3,32,000, which is 12,000 adverse. Labor ideal variance always will be adverse. So labor ideal variance always will be adverse. 3b minus 3, which will be 8,000. 8,000 adverse. Next, labor rate variance, which is our normal, which is 3 minus 4, which you have to apply. 3,40,000 minus 3,46,800. This is also adverse. So whenever adverse, we won't put negative, we'll just write adverse. Then finally, labor cost variance, which is 1 minus 4. This we can do two way. Either we can add all or we can just make it. It will be 26,800. Adverse. So hope all of you are clear. So this is how we have to approach. So this is how we have to approach. So we should be very clear about actual hour, net actual hours, all these working. Now let us move with the overhead. Let us move with the overhead. They were asking variable overhead. So variable overhead, no need of split. We have to do directly what is the variable overhead. So we can take this 193. Here you have, if you go, you can go with hourly basis or you can go with output basis, but hourly will go for it. Actual hour into actual rate, which is actual wage. Standard hour into standard rate. So standard hour already we found out now. See, this is one shortcut. When you find out the standard hours for labor, same only for if you use hourly basis. If you use hourly basis, because both are same recovery rate. Right? That it is labor hour. Here you use labor hour as a recovery rate. Since you use labor hour as a recovery rate, standard hour will be same. No need to take again time. So you have the standard hour 1,60,000. So you can directly approach. The variable overhead rate, it is given very clear. Here, very important. We can't do for hourly. It is output basis. They are given specifically per unit. So you can go for here output basis, actual quantity into actual rate, and here actual quantity into standard rate. So here why we go for output basis, because variable overhead they mentioned recovery rate per unit. variable overhead, a very good benefit for us, because we have learned in our regular session that we can find out recovery rate either hourly basis or output basis, either hourly basis or output basis. So here it is given output basis only, not based on hours. So output formula we have taken. Output we have learned that standard will not come first, actual only will come. So actual quantity into standard rate. So now we can take this actual quantity into actual rate is your actual variable overhead, which is 60,000. So here actual quantity we know already 8,000 unit into what is the cost? Variable overhead is 8. So you will get the data very clearly. 8,000 into 8, 64,000. So what is the variable overhead variance? Variable overhead 64,000 minus 60,000, which will be 4,000 adverse. This is also, it is showing adverse. So hope you are clear. Now finally, we have to do for what? Fixed overhead. Fixed overhead days and all not given. So if days and all not given, we have to do the broad three area only. What is broad three area? Fixed overhead volume variance, fixed overhead expenditure variance, then fixed overhead cost variance. So these three area only we have to find out. So you have to go for all these areas only. So here also fixed overhead, we'll see what is the base they are using. Fixed overhead also per unit only the standard rate. So it is really easy. Since it is per unit, you have to follow the formula you have learned for unit basis. So if it unit basis, it start with actual quantity into standard rate, and here it will come what? Budgeted quantity into standard rate, and here will be actual quantity into actual rate. So you have to apply here. So hope you are ready. So let's start. You have learned one shortcut also. For your benefit, I am telling one more point for you to revise. This is what actual fixed overhead. Yes. So before proceeding this, variable overhead 64 minus 60, it is positive only. So you have to put 4,000 favorable, because we have did more number of adverse, automatically written as adverse. 64 minus 60 is 4,000 adverse only. So here actual fixed overhead, budgeted quantity in the standard rate is called budgeted fixed overhead. So let's start. Actual fixed overhead will be given in the question itself. Actual fixed overhead will be given in the question itself. So what is your actual fixed overhead? 1,84,000. Now budgeted fixed overhead 10,000 unit we budgeted, for each unit 20 rupees. 10,000 unit budgeted, how mentioned? It is given here, budget 10,000. So it is 2 lakh. Now coming here, actual quantity is only what? 8,000 into 20. So it is 1,60,000. Now you got all the data file here, friends. What all the data you got? Fixed overhead, volume variance, which is 1,60,000 minus 2,40,000. It is negative. So negative now we have to put what? Adverse. Fixed overhead, expenditure variance, which is 4 minus 5. 2 lakh minus 1,84,000, which you will get 16,000 favorable. Then fixed overhead, cost variance, which is what? 1 minus 5, 1,60,000 minus 1,84,000, 24,000 advance. So hope you are clear. Please take your time on copy, friends. So this is how we have to approach this. Now, my dear friends, we don't want to compute calendar variance. If you want to compute calendar variance, they have to give what? Calendar days. Budgeted 25 days, actual 26 days, then only calendar variance. If you want, you can do efficiency variance. Efficiency variance, if you want, you can do. We have to do here one item called a standard quantity into standard rate. Standard quantity into standard rate. If you want, we can do here. If you want, I will just show you the answer also. What is standard quantity? Standard quantity for actual production. Standard production for actual hours. So we have 1,70,000 hours. We have 1,70,000 hours. For one unit, 20 hours, standard hour. So how many units we can get standard production? 1,70,000, one unit, 20 hours. How you got one unit, 20 hours? Here it is labor hour 20. So you got 8,500. This is what standard quantity. So if you want to do efficiency, it will be 8,500 into 20. This 20 is what your recovery rate, net 20 hours. So 8,500 into 20, you will get 1,70,000. So my dear friends, if anyone want to do fixed overhead efficiency variance also you can do. But this type of essay question, load 3 also is enough. So 1 minus 2, you will get what? 1,60,000 minus 1,70,000, which is 10,000 adverse. Yes, here we can also consider one more way. This actual hours worked also we can take. We have not considered that. If you do actual hours considered, ideal time we can reduce. But generally that kind of adjustment not required. So I have done efficiency additionally only. So better way, just like how you do for labor, we can reduce NAH. That is the best way, but if it is done as a normal, it can come. So efficiency we did additionally only, we won't use for reconciliation statement. All of you clear? Now, main point. See, my dear friends, they are asking reconciliation statement. See, if you go through reconciliation statement, this is the one normal format of reconciliation statement. Maybe you might have been already learned. So here, what you do, budgeted sales, budgeted cost, sales volume variance. But we don't want to do this much lengthy. We can do one shortcut here. We can do one shortcut here. What is the shortcut, friends? They are asking actual profit with a standard profit. See, what is this statement? What is, I have shown one statement called a budgeted profit. So this is the format, budgeted profit, standard profit, actual profit, which we did in our regular class also. But here, they are not asking reconciliation with the budgeted profit. If it is asking to prepare budgeted profit, then you have to do sales variance also. But here, they are asking in the question very clear. They are asking actual profit with a standard profit only. Since they ask actual profit with a standard profit, our entire struggle is over. What we have to do? We have to just to find out our standard profit only. So just step one, find out the standard profit. Then you can apply for what? Your general point. So what is the standard profit? Standard profit is what? So statement of reconciliation. 1 minute, this reconciliation will over. So are you able to understand? We don't want to use budgeted profit because question is asking standard with the actual only. So reconciliation will come in two steps. So statement of reconciliation. What is a standard profit? Standard profit is given in the question itself. Standard profit is 32 rupees. Sometimes standard profit may not be given in the question. So if standard profit is not given in the question, you have to find out. How you have to find out? Step one, you have to find out standard cost, standard material, standard labor, standard everything you have to compute and then find out the standard cost and you reduce it to standard price. But here already standard profit is given 32. So 8,000 unit we sold and we got 32 rupees profit. So what is the standard profit? 8,000 into 32, you get 2,56,000. You get what? 2,56,000. Now what you have to do? See, you have to do add all the favorable variances. Add all the favorable variance and less all the unfavorable variance. This is only step. Here you have to take it only the individual one. Very, very important. Just listen very well. Very, very important one point. Just listen very well. Then only you will understand very clearly. What is the point, friends? Point number one. I am just telling you very clearly that question we have find out a material usage variance, material price variance, material cost variance also. But for computing the reconciliation statement, take only usage and price because cost already is a double effect. Cost is a sum total of what? Usage and price. So if you take that, double effect will come. So don't take grand total, take only individual items. Don't take grand total, take only your individual items. Then it will be very easy. So what are all the favorable one, friends? I think we have only two favorable items. What are all the favorable item we have? Variable overhead variance. Variable overhead variance. If I am not wrong, 4,000 rupees. Then one more item. Right now we find out fixed overhead expenditure variance. What is the amount? 16,000. So this item we have to add. Now you have to less all the unfavorable variance. Unfavorable means everything from our material usage variance, material price variance, labor efficiency variance, labor rate variance, labor ideal variance, fixed overhead volume variance. Here we don't want to take a what you called calendar variance or capacity because we are in volume already. So what is the material usage price? 10,000, 66,000. Now labor efficiency variance 12,000, 8,000. 12,000, 8,000. Rate variance 6,800. Volume variance 40,000. This you have to minus. You will get your actual profit. 1,13,200. 20,000. Any item missing? One second. Labor efficiency variance. No, no. Actually, it's correct only. I have taken wrong column. This I have to add, then I have to less. See, you will get exactly the correct answer. 1,33,200. It will get tallied. So this is how you have to approach reconciliation. This is the reconciliation with a standard profit with a actual profit. Sometimes reverse calculation also they will come. So I hope you can understand the reverse calculation from this point. And I have already told it. This is the format you have to go for when there is a budgeted sales. So budgeted sales, budgeted cost, budgeted profit. Sales volume variance, flexible variance, and you get standard profit for actual quantity. Then you have to add all the favorable, all the unfavorable. Then you will get what? Actual profit. So hope you are clear how to approach the statement of reconciliation. It's a very good 14-mark question. So please understand very well. Now, my dear friends, once you completed, now we can proceed with the next question. June 24 question. See, sometimes what happened now in June 24 they came 7 mark. That is one labor question, one overhead question like that they will ask. But current trend I believe you will get 14-mark question only. But still we can go for your current MTP also they come with 7 mark. So 7 mark comparatively easy only because they will not ask adjustment advanced. It is comparatively easy only, but 14 mark, your struggle is comparatively less. So let's start. Yes. 18 workers, that is 12 type 1 and type 2. So here two type of employees are there. In the previous question, only one type of employee, two type are there. So for the month or 25 days, each type 1 is expected 8 unit and type 2 is produced 10 units per day. They work on a regular shift from 9 a.m. to 5 p.m. That means 8 hours, if I am not wrong. And have a tea break 10:30 to 10:45, 3 to 50. That is half an hour tea break. Lunch break another half an hour. So total will be 1 hour. The actual production is 2000 unit by type 1 and 1200 is for type 2. So they are given production details also. So it is better you have to make all data properly. Standard wage rate is given correctly 80 and 90, and another it is 90 and 100. During the 16 hours lost both types. So hours also lost. How many hours? 16 hours, which is also as per expectation for waiting for material and inspection. Note, normal waiting and break time are included in standard hours of production. That means it will not consider as an idle time. Required standard labor cost for the month, labor cost variance, labor efficiency variance, labor idle time variance. So cost, efficiency, idle time, all the three they are asking. So you have to prepare just like what we prepared in the previous question, same format we have to start. That is, this is the format. So we have two items. So can you please start, friends? Let's see how to approach. First of all, we'll check if there any idle time is there or not. See, 1 hour, there is a normal idle. Into 12 employees, so it will be 12 hours. Into 25 days, so how many hours? It will be 300 hours. Actually, 16 hours only lost. That means there is no idle time at all. They haven't mentioned 16 times per employee. It is both employees. So actually, there is no idle time. So it is inline, we have to read it. They give a note very clear. That is for the purpose. This is a previous year question. They have also done the same assumption. Normal waiting and break time including standard hours of production. That means 16 hours, well, that is for computing your standard labor cost. This data is given for standard labor cost. So, my dear friends, I will explain once again. See, 12 employees are there under type 1, 6 employees are there type 2. So, 12 plus 6, total employees is what? 18. So, every day, 18 hours, that is 1 hour for one type, for 25, they are lost. But here only 16 hours lost, which is part of the time. Because any hours above the normal only we consider as what? Abnormal. Any time above the normal only we will consider as what? Abnormal. So we can. So this is the assumption taken in your exam. If you want to do separately, that also you can do. If you want to do separately, you can give a note on that. But generally, the wording, if you read it, they have been specifically not mentioned that it is separate. It is separate. They are not specifically not mentioned. It is separate. See, it is based on the nodes only. So don't worry what the assumption you will make. So this is on the based on the nodes because they mentioned that during the month 16 hours lost. So already you put every day 1 hour. Every day 1 hour means what? 25 days, 25 hours. You have ideal time is there. The logic is what? 25 one day, 1 hour, 15, 15, 30, 1 hour. So 1 hour into 25 working days, 25 hours is the normal. 16 hours only lost. So it is, there is no point of abnormal. If it is abnormal only, we will go with what? Ideal time because of the word. It is as a part of normal. So please note that since your ideal time is 16 hours, since your ideal time is 16 hours, your normal ideal time is 25 hours, there is no abnormal, so no need of computing ideal time variance. So you can eliminate this column. You can go with 1, 3, 4. So here you can go for type 1 and type 2. Type 1, we have type 2. So what is the actual wage paid? Actual wage paid we have to find out. That is 25 days. In a day, how many hours they work? They start with 9 o'clock. So 8 hours. So 8 hours. How many employees of type 1? How many employees of type 1? We have 12 employees of type 1 into what is the actual rate? They said specifically that actual rate is 90 rupees. That's all. Coming to here, what will be the change? 25 will be same, 8 will be same, but 12 employees are not there. Only 6 employees and wage also different. It is 100. So this is the difference. So hope you are clear. Here also, what will happen? Here also, what will happen? Actual hours 25 into 8 hours into 12 into standard rate. Here will be what? 25 into 8 into 6 into 80 rupees. Now you have to find out your standard hours. Standard hours for type 1. What is the production? They have production of what? To 2000 unit, 8 units per day. See, 8 units per day in 8 hours. So 1 hour, 1 unit. Very important. 8 units per day. How many hours you work in a day? 8 hours. So 8 units by 8 hours, 1 hour per unit. So you have 2000 units. So standard hours for actual production 2000 units into 1 hour per unit. So you will get what? 2000 hours. Same thing, 10 units per day. So what will be the hours? 2000, 10 units per day. So what is the time for 1 unit? 2000 by 10 into 8. 60 minutes you will produce how many unit? 60 units, that is in a day 480 minutes you will produce 10 unit. So 48 minutes you produce. This is the standard hour for 1 unit. So standard hours for actual production. So actual production, how many units? Actual production is 1200 only. We have to change this number. It is 1200. So 1200 into 48 by 60, 960 hours. So both the way we have it. That is for 1 unit 48 minutes. 1 unit 48 minutes. So what is the time for 1200? So I'm repeating again. How you got 48 minutes? That is in a day 10 unit. In a day 10. Here in a day 8 units. So very easy. 1 hour for 1 unit. Here in a day 10 units. So 10 means what? 1 day means 8 hours. 8 hour means 8 into 60, 480 minutes. 10 unit means 480. So 1200. This is total hours we converted into minutes. That is hours, minutes we convert into hour. 1 hour means 60 minutes. So 960 hours. It is 960 hours. So now you can get here 2000 hours into 80. Here also one small correction. Standard rate is 80 and 90. So this is 90. Because type 2 wage rate is different. Type 2 wage rate is different. Here 960 into 90. This is type 1. Hope all of you are clear. So this is how you have to approach, friends. Hope all of you are clear. 6 means 6 employees. So how to get the answer now? Labor will do both together. Type 1, type 2. Labor efficiency variance. Labor rate variance. All are adverse. Obviously, the reason is what? 80, 90. 80 is the standard we fixed and 90 we paid. Same way we have to approach for what? Type 2 also. That's all. Hope all of you are clear. Here both will come nil. 12,000. So hope all of you clear. Please take your own time and complete. So this is how we have to approach. So we are doing as many previous year questions to ensure that MQP question to ensure that you can able to score 14 out of 14 in standard costing. 14 out of 14 in standard costing, which is compulsory question for your CMA Final SCM paper. Now, if you want, we can do the total also. So total, we have to add both together. Your suggested answer, they done total also. So whenever you have two variants, it is advisable to do total also. Hope all of you are clear. So before proceeding to the next question, if you go through our question, they're asking first one small point, standard labor cost for the month. Standard labor cost for the month. So we can do that also. That is one line only. Standard labor cost for the month. That we can do in 1 minute. See, 2000 units into 1 hour per unit into standard labor cost, which is 80. That's all. So 2000 into 80, 1 lakh 60. This is for type 1. Same way we have to do for what? Labor cost for type 2. Type 2, it is not 2000 unit. It is how many units? 1200 unit. So 1200 unit into 1 hour not per unit. It is what? 48 minutes. It is what? 48 minutes. So for converting hour, you have to divide by 60. That's all. So 1200 into 48 minutes by 60 into 80. Not 80. Their standard rate is 90. So you have to multiply with 90. See what is by 60, friends? By 60 is just for converting into hour. 48 minutes we are taking, so converting into hour we are dividing by 60. So this is the standard labor cost. So hope you are clear for that also. So the question is over. So comparatively, this is also fine for 7 mark. 14 mark question we have to do all the variants. So here we have to do limited item only. So that is also fine for us. So my dear friends, now we'll go with question number 3. So hope all of you are ready. So it is a again June 24 question which come from over. So overhead is a very good area which can come. They given overhead recovery rate directly in the question. Standard overhead recovery rate per unit. That means on the base of unit they given. Standard rate, yes, on the base of hour also given. So recovery rate on the base of hour is given. Recovery rate on the base of unit is given. Budget production, actual working hours, actual overhead out of which 62,500 is fixed. So tell my dear friends, actual 2,95,000, 62,500 is fixed. So what will be the variable? Balance amount. Variable will be what? Balance amount. So overhead are absorbed on the following flexible budget. So this is they given to give the budgeted fixed overhead and budgeted variable overhead. Analyze and calculate the following overhead variance on the base of variable overhead efficiency, variable overhead expenditure, variable overhead efficiency, and capacity. Shall we start, friends? Yes or no? Hope all of you are ready. So first we will go for variable perspective. So variable overhead variances. We can do both hour and output also. We'll go for hour. So standard hour into standard rate, actual hour into standard rate, actual hour into actual rate. This is what called actual variable hour. This is 1, this is 2, this is 3. Correct, friends? So what is actual variable overhead? We can get a reverse way. What is the reverse way? Total variable overhead is what? 2,95,000 minus 62,500. That's all. So hope all of you are clear. Actual hours is given in the question. So it is very easy. Actually, similar question came for CA India where they asking fixed overhead capacity, calendar, everything. But here not that much test is there. So actual hour is given in the question, which is 74,000. Standard rate also given in the question. What is the standard hour? It's 4 rupee. 4 rupee per hour. They said standard rate per hour 4 rupee. So you get 74,000 into 4. Now you have to get SH. SH only the distance. Standard hours for actual production. This is very testing. This is only the test point. So standard hours for actual production. So your actual production, you know, standard hours per unit you should get. For that you should get what is a budgeted hour. Budgeted hour, how you will get? That is a very important point. So hope all of you are ready. If you want to get this budget number, then only you will get the standard. That is why the 7 mark is there. To get this fixed also easy. So how you will get this? For that, you should split it budget fixed overhead and variable overhead. See, in your point, you have learned it already. Your variable portion, that is you have to split both. So variable portion change in cost by change in hours. So you have to see your budgeted data. You change in units. Here it is units. Change in units. So what is the change in cost? You take any one. Generally, we follow high-low method. What is high-low method? Highest and lowest. So you can take 2,70,000 minus 1,80,000 divided by 2,70,000 is for 14,000. What will be the 8,000? What will comes, friends? Rupees 50. So this is what variable overhead rate. So you can check with other data also. Same thing. 2,10,000 minus 30,000, 2,000. You will get the same thing only. But generally, high-low method is good. Now you can take any one level at 8,000 units. What is the total overhead? Total overhead 1,80,000 less variable overhead, which will be 15 into 8,000. What you will get, friends? 15 into 8,000, 1,05,000, 1,20,000. So your budgeted fixed overhead, we got it, which will be 60,000. Your budget fixed overhead is 60,000. What is the standard recovery rate on the base of our? What is the formula? Reverse it. Everything reverse. A very good question. Standard recovery rate on the base of our budgeted fixed overhead by budget hour, because we know what budget. So standard recovery rate is 4 rupee 60. So what is the budget hour? Reverse. It is 4 rupee, which is given in the question already. 60,000 we got. So what is the budgeted hours? Which is 60,000 by 4, which will get what? Okay, overhead it is standard recovery rate. We got 60. So here standard rate per hour. This is standard recovery rate per hour. So standard recovery rate is 4 rupee per hour. So standard rate per hour means overhead by budgeted hour. Overhead by budgeted hour. So your overhead we have to get what? 4 rupee. Budget overhead we got 50. So budget hours we can get reverse calculation, which will be 60,000 by 4. Your budgeted hours is what? 60,000 hours. So you get your budgeted hour, which is budgeted hour will be 60,000 by 4. You will get 15,000. Now, why you this budgeted hours you need? Standard hours for actual production. So you require standard hours for actual production is equal to standard hour per unit into actual. So you require standard hour per unit. So what is the formula for standard hour for per unit? Standard hour per unit is equal to budgeted hour by budgeted production. This is the purpose we did all the reversal. You can do different method. I am doing one of the easiest method. You can do different method. I am do one of the method, friends. So you can do different method. So what will be the answer, friends, now? Yes, I know you are ready. So your answer is budgeted hours, which is 15,000. Budgeted production. What is budgeted production? Which is 12,000. So you will get 15,000 by 12,000, 1.25. Now, standard hours for actual production, you will get it, which is actual production is what? 15,560. 15,560 into 1.2. You can do different method. I am doing one of the method which you can try. 15,560. You can do output ways also. So 19,450. So if you approach here, one second. Budgeted hours. So my dear friends, actually when we take these numbers, that is we got standard rate for, if you apply here, we found here standard hours is 19,440, but actual hour is 4,000. That means the question what is mentioned here, small point, standard rate, number of hours per unit only. So you can go reverse way. So what you can do now, this method will be lengthy. So we can just change this alone. We can just correct this. That is standard hours per unit. 20 rupees is the recovery rate for. So you take what? 5 hours. What is the standard production or budgeted production? What is the standard production or budgeted production? Which is 12,000. So you can do standard hours will be 12,000 into 5. Then only you will make the correct because they make per hour unit. So you will get what? 60,000. So now you can apply it here. 60,000 into 4. So 60,000 into 4. You get what? Okay, 60,000 into 4. Now we'll go for SR computation. Budgeted fixed overhead by budgeted hour. Now our budgeted hour is changed. So we told that 4 rupees is hour only. So your budgeted fixed overhead is 60. Budgeted hours is what? Budgeted hours 60,000. So your recovery rate is what? Yes. One second. See, one small point we have to note it. See, we are doing a variable fixed separately. Since we are doing variable fixed separately, the recovery rate given in the question is for total overhead. So we should not take not 4, we should not take not the 20 also. So what we have to take, we have to go reverse calculation. What is the reverse calculation? So this is wrong. We have to correct this. So let's start. Correct, friends? So how to start now? We have our budgeted fixed overhead is what? 60,000. Now your budgeted hours. We have already discussed what is your budgeted hours will come. Budgeted hours, you have your 12,000 is the production, budgeted production. 12,000 is the production. For every unit, we took 5 hours. How you got 5 hours? 20 by 4. You get 5 hours. So you get what? 12,000 into 5. You will get what? 60,000 hours. Now we have to find out variable overhead recovery rate. What is the formula? Budgeted variable overhead by, here already we know, which is 60 rupees. Budgeted variable overhead by, or we will go for standard recovery rate for fixed overhead. What is standard recovery rate for fixed overhead? Budgeted fixed overhead by budgeted hour. So budgeted fixed overhead by budgeted hour. Your budgeted fixed overhead is what? 60,000. Your budgeted hour is what? 60,000. So you will get rupees 1 per hour. Now, very interesting. We are doing variable only. What is the total standard recovery rate? Which is 4. So what will be the variable overhead recovery rate? Balance. 4 minus 1, which will be what? 3 rupees per hour. It will be what? 3 rupees. Because we have taken wrongly what? 4 rupee. We have to take 3 rupee. So when you take 3 rupee, what is the answer, friends, now? Your actual hours is given in the question, which is 74,000 into 3 rupees. So answer over. 74,000 into 3. Now coming into standard hours. Standard hours is what? Standard hours for actual production. Your actual production is what? 15,560 into each. What is the standard production hours? 1 hour per unit, not 1 hour. 5 hour per unit. So what will come? 15,560 into 5, 77,800. So 77,800 into 3. So once you get variable, fixed is directly copy paste only. Variable, we took that wrong reading, that corrections. Now we have just corrected the same. So what is the variable over it? Efficiency variance. Anyone tell me the answer? It is favorable only. 11,000 favorable. What is variable over it? Expenditure variance. 10,500 adverse. These two only they asked. What is they asked, that only we have to find out. Now next they are asking fixed overhead efficiency and capacity, which is very easy. We can do in 1 minute time because all the data is available with us. Fixed overhead recovery rate is 1 rupee. We can do for output basis also, but we will do for hour because hour all the data is available. So shall I scroll down, friends? Scroll down. Okay, friends. Shall I? Thank you. Now we can go for fixed overhead. So we need 1, then we need 2, 3. 3 means 4 only because we don't have no calendar days. So we can go for. It is hour only we are doing. So standard hour into standard rate, actual hour into standard rate, budgeted hour into. We have no calendar days. So we can go budget hour into standard rate. This is called budgeted fixed hour, which is 60,000. See, 1 minute we'll finish it off. What is the standard actual hour? That is 74,000. 1 rupee because already we found the recovery rate. Standard hour also we found out 77,800. So 77,800. 1 rupee, how you found, friends? 60 by 60 we found it is 1. So that's all. 1 minute we can compute. So 77,800. It's a very good question. So hope all of you are completed. So fixed overhead efficiency variance 1 minus 2. 77,800 minus 74,000. 3,800 favorable. Fixed overhead capacity variance. See, capacity generally 3 minus 4. We don't have no 3. If you don't have 3, you can take 2. It's 3 minus 4 only, but 3 is not there, you can minus 2. So 74,000 minus 60,000, 14,000. That's all. Congrats, my dear friend. So June 24th question also we have done. Now coming into, once you complete, we go for December 23, which is just like December 24 consolidated essay question. A super question which will give you a perfect knowledge. You will get all clear understanding if you do December 23 question also. So please take your time and compute. So my dear friends, now we'll go with a December 23 question, previous year question. So this is how the question which is came for the exam. It is similar to our first question. Standard data is given below. Our like only one type of material labor. So revise fixed overhead is 1 lakh per month. Planned output is 2,000. Selling price is 550. Output was 1,800. So they given all the data. Analyze the variance which occurred during the month. Shall we? So we'll go for material variance. So it will give you a perfect clarity on all the questions for your exams. So let's start. So first we have to do for material, standard quantity into standard price. You can do parallelly very fast. So this will be helpful for you to revise. Actual quantity into standard price, actual quantity into actual price. So we have only one type of material, so no need to do all the three. So AQ into AP always will be given in the question. 1,72,000. Actual quantity is 8,500 kg. Standard price is what? 20 rupees. See, this is the speciality of a essay model question, which you can get very easily. So standard quantity for actual production. Your actual production is what? 1,800 only. For every unit, you require 5 kg. So 9,000. So 9,000. This is the answer. So I'm not finding what is yield, that is you can get. I'm doing shortcut here. Material usage variance 10,000 at favorable. Material price variance 2,000 adverse. So cost variance will be 8,000. So cost in your reconciliation not required, you can get it. Shall I proceed next? Next we can go for overhead, labor. So labor, my dear friends, is the reading. This is comparing to your December 24. There is no twist of what? Idle time. Correct? There is no twist of idle time. So you can do directly same way standard hour into standard rate, actual hour into standard rate, actual hour into actual rate. So what is the wage? 4,20,000. Actual hour is 20,000. What is the standard rate? 20 rupees. So 4 lakh. Standard hours for actual production. Actual production 1,800 into 12. So 21,600. See how easy we are able to complete the question. This is speciality of practice. When you practice more number of questions, you will become expert on this area. Labor efficiency variance favorable. Labor rate variance adverse. Obviously, labor cost variance will be add both. So 12,000 favorable. I'm not doing that. So shall I proceed for overhead or weight, friends? So this is how you have to approach. Now we can go for variable overhead. So how the variable overhead, friends? We need only 1 and 3. So actual variable overhead, they mention clearly 2,20,000. Standard hours already we found out 21,600 into 10 rupee. If both are hour, we can save a lot of time. That is specialty. So variable overhead cost variance 2,16,000 minus 2,20,000. You will have adverse 4,000 adverse. Now they are asking fixed overhead. We can do fixed overhead in all the three. So how to approach, friends? Hope all of you are ready. Shall we? Standard hours into standard rate. So actual hours into actual rate is called actual fixed overhead, which is 98,000. Budgeted fixed overhead they given 1 lakh. Here it is 21,600. That is for unit. We will do output basis. So actual quantity into standard rate. Standard recovery rate on the base of output, which is 1 lakh by 1000 unit. Here, fixed overhead on the base of output is easy, so that you can do very easily. 50. So what is the actual quantity? 1,800 only into 50. That's all. So fixed overhead volume variance 1 minus 4, 10,000 adverse. Fixed overhead expenditure variance 4 minus 5, 2,000 favorable. Fixed overhead cost will be obviously will be what? 8,000 adverse. So hope all of you are clear. The essay question is completed, friends. Now reconciliation, the same method, same format. Do I want to do the reconciliation statement or will you do it? Friends, do I want to do the reconciliation statement or will you do it? Do you want me to do the reconciliation statement? Hope all of you are clear. Yes. Yes. Now once this completed, we have to go for reconciliation. They are asking here also actual profit with the standard profit. So they are not asking you to make it anything about budgeted profit. So you can go for only similar to our previous year question. So what is the standard profit, friends? We have to find out. Standard profit standard profit will be, your selling price is what? 550 minus all your cost. Material 100, labor 240, overhead 120, fixed 50. What is the answer, friends? 100 plus 240 plus 50. 40 rupees. So 1800 unit you are selling into 40. So 1800 into 40. Hope you are clear. Yes. Now we have to do what? Add all the favorable and we have to less all the unfavorable. So what I am doing is, since already we did similar question, I am just taking directly the favorable addition. So fixed overhead expense 2000, add a variable or adverse. Yes, labor efficiency 32,000, add a material usage 10,000, add. Now we have to make unfavorable. Fixed overhead volume 10,000, add 4,000 variable overhead, add labor rate 20,000, add material price variance 2000, add material price variance 2000, add. This is what? Actual profit, which will be 80,000. Are they given in the table? Actual profit 40,000. Now, my dear friends, we are getting actual profit is 80, but when you go through this data, we have here 40,000. Why this difference? You can check all the data you taken is correct or not, it will be correct. Still, why there is a 40,000 difference? It is just because, I will tell you, we can just go through our first question. In our first question, we have our net profit, we have our standard profit, we done this. So one small point I will tell you, can you please take your calculator? Your sales value here, 11 lakh 20 divided by 8,000. What is the selling price per unit? 140. Here, what is the budget selling price? 140. Both are same price. See, we don't want to start with a budgeted profit. The first answer, they start with budgeted profit. We don't want that. If you start with budgeted profit, you have to do sales volume also. But here, selling price is different. You check our current question. Current question. Here both are 140. You take this question. Here selling price budgeted is 550. What is the actual selling price? Can you please take 9 lakh 50 by 1800? Can you take 557? That means price is different. Price is different. Since price is different, what will happen? That is adverse. So sales volume we won't take. If you are starting with budgeted sales, I have shown you that format already. You start with budgeted sales, you start with budgeted profit, you go with budgeted profit, sales volume variance. So volume we don't want to take it. but margin we have to take it. So that is we are just going to approach now. Hope you are ready. So you have to just adjust the margin variance. So this you have to check it. In the previous question we don't require because both are same selling price. It's very rarely happens. So let's just check margin variance. So what to do sales margin variance, friends? Same thing we can just make here your 3 and 4. Your what is your budgeted margin, friends? Your actual is what? See, your margin is budgeted margin is what? 40. Actual margin is what? 40,000 by 1,800. What is that? Budgeted margin is what? 40. We got standard profit. Actual margin is what? 22.22. 22.22. Correct, friends? So what is the difference? So shall we? Are you ready, friends? Shall we? Got it? Yes. So you have to take your margin variance, your actual quantity into actual margin, budgeted quantity into budgeted margin. Correct? Actual quantity into one second. Actual quantity into actual margin. We will make it. So here you have 1,800 into 22.22. 1,800 into 40. How you got 40? Are you clear? Yes. So 40 we got 550 minus all the cost. Already we got the 40. So 1,800 into 40. 1,800 into 22.22. You get what? 40,000. Now sales quantity variance. What is the quantity variance, friends? So we can do, we don't want to go this much lengthy route also. We can get that margin in a another shortcut method also. I will make it one more shortest way. Sales margin variance. What is that? See, you have 550 is the selling price for, can you please tell me the working note? 1,800 unit into 550. But actually, we are able to get a revenue of what? 9,50,000. Shortcut method. Directly, we are adjusting with the cost. So we don't want to go lengthy route. We got that 32,000 plus 840, but here also you will get it. What you will get? 1,800 into 550 minus 9,50,000. You get 40,000. This will be adverse because we know sales variance always you have to go reverse way. Sales variance always you have to go reverse way. That is, you remember 3 minus 4, you have to go for 4 minus 1. So this is a adverse. So you will get the answer called what? 40,000. So this is because of the price difference. This is because of the price difference. So you will get the answer. You can go for budgeted also, so that 8,000 adjustment you can do it. That's all. So this 14 mark question also. Now we will go for MQP. MQP recently released two MQP for your June exam. One was released in the beginning of the May month. Now recently at the last week of May month it is released. So my dear friends, we are going to do MQP. So that will boost for you to practice. MQP majority taken from your study material only. So our class workbook covered all the questions. So it will be comparatively easy. I believe we can do very fast. Okay. All the best. So once you complete it, we'll proceed for the next question. Yes, this is your set 1 of MQP. Your MQP June 25 released by ICMA Institute. 7 mark only they came. But I believe it will come 14 mark question only. But how? Somehow we will do this material variance. It is your study material question or workbook question. But why we are doing? Because we haven't done no question on yield and mix variance. So it will be a revision for you to the same. So we can go for it. So a company manufactures a special type of fencing, 12 feet inch, 8 inch half thickness. Standard mix is given below 1200, 500, 800. So the company should produce 12,000 square feet of half thickness. During the period, 1 lakh standard cells is produced. The material is given below. They given the actual A, B, C. They are asking us to find out all the variances. So here you have to find out mix yield all the variances. So we can get it very easily. How can you get, friends? We have to do standard quantity into standard price. Then we have revised actual quantity into standard price, actual quantity into standard price, actual quantity into actual price. So this is 4, this is 3, this is 2, this is 1. So we have to find out for A, we have to find out for B, we have to find out for C. So what is for A, friends? Directly given in the question 2240. So directly given total we can take. Mostly this actual data directly given mostly. So 1950 and 3750. Coming here, actual quantity which is 7000 kg into standard price. Standard price we have to take from here 0.3, and here out will be 3000 into 0.6. Next 5000 into 0.7. So hope all of you are clear. RAQ we have to find out what is the total actual quantity in standard proportion. My dear friends, in your regular class you might have been learned what is RAQ. This in your study material it is RSQ. So both are the same meaning. Either RAQ or RSQ, whatever it is, same meaning. Total actual quantity in standard proportion. So what is the total actual quantity, which is 15,000? What is the standard proportion? Standard proportion is already given. This is your standard proportion. So 12 is to 5 is to 8. Now you have to approach this 15,000 into 12 by 25. Next will be 15,000 into 5 by 25. See, 15,000 into 8 by 25. So you got the data. So you get 3360. Now standard quantity only an any interesting point. Standard quantity. Here there is a very important point. See the ratio 12 into 8. That means 96 is the standard. But here they mention is what 12,000 square feet. So you have to change into the feet. So how it will be, friends? That is 12,000 is for 96. What is for 1 feet? 144. How you got this 96 and 44, friends? The 12 into 8 inch. 12 inch into 8 inch, you get what? 96 inch. So here the standard size is inch, but here they mentioned in what? Square feet. So 1 square feet is what? 12 square. So 12 square means what? 12 into 12, 144. 12 into 12, 144. That is why we did. Now you can get for A, B easily everything. 1 lakh, this standard quantity. 1200 by 18,000 into your actual production is what? 1 lakh. 666 B. Next it is 500 by 18 into 1 lakh. See, same way. We are multiplying because standard you have to multiply with your actual. So we are multiplying with your actual. That's all. You get all the data. 666.67 into 0.3, 277.78 into 0.6, 444.44 into zero point 0.7. See, you can do everything individually and total you can do, but for time saving purpose, I am doing only for total. You can show based on the mark per unit or total. I am doing only total only, but you can show per unit also. So, my dear friends, first time we are doing material yield variance. Material yield variance is 1 minus 2. If you want A alone, take A data alone. We are doing total, so 677.78 minus 7320 like this. You have to do individually for exam purpose. because some examiner may not give the mark unless you do individually. Material mix variance 2 minus 3. This is also adverse. So both are adverse. So material usage variance obviously will be adverse. Okay. Then material price variance. I have done everything shortcut method, but some examiner will ask you to do total. This is also adverse. Material cost variance, I'm just adding. Hope all of you are clear. So this is how we have to approach a very good question. So hope all of you are clear. So we have another one interesting question, question number 6A. This is for overhead. Overhead also, my dear friends, we have not done a capacity calendar. So better we can do this question also, which is came for MQP set to 1. Okay. So overhead, they have not specifically mentioned anything. So we can take it as fixed overhead. We can take it as generally it is fixed overhead if it is not specifically mentioned. They haven't told anything about variable, so we'll assume it is all are fixed overhead. We can do output basis or hour basis. So what method we'll do, friends? Okay, we'll do on hour basis. We can do output or hour basis both. So as we discussed, we'll do output basis. So if you are doing hour basis, how it will come, friends? So this is the data. Standard hour into standard rate, actual hour into standard rate, RBH is a new point. Revised budgeted hour, budgeted hour into standard rate, which is budgeted fixed overhead, actual fixed overhead, which is actual hour into actual rate. So let's start. Hope all of you are ready. So actual fixed overhead. What is the actual fixed overhead? 1,68,000. Budgeted fixed overhead, which is also given here, 1,60,000. Now RBH. What is RBH? You have to take first budgeted hour. Budgeted hour by budgeted days into actual days. So what is the budgeted hour? Out man hours per day. 8,000 hours. How many days? 22. So 8,000 into 20, 1,60,000. So 1,60,000 is for 20. What will be for 22? That's into standard rate. Budgeted fixed overhead by budgeted hour. So if you take hour, you have to divide with hour. If you take output, you have to divide by output. So 1,60,000 divided by 1,60,000, 1 rupee. See, actual hours is given in the question. That is man hours per day 8,400 into 22. 1,84,800. Standard hours for actual production. So what is the standard hours for actual production? Actual production 0.9. So 1,84,800 hours into 0.9. Total hours, every hour you get 0.9 units. So what is the standard hours per unit? Standard hours by budgeted production. Budgeted production is what? 1,60,000. So 1,60,000 by 1,60,000, 1. So standard hours will come what? Same, because 1 unit per hour, so accordingly 166 into 1. So you will get the answer. So what is the solution, friends? Fixed overhead, efficiency variance 1 minus 2, fixed overhead, capacity variance 2 minus 3, fixed overhead calendar variance 3 minus 4, fixed overhead volume variance 1 minus 4, fixed overhead expenditure variance 4 minus 5, fixed overhead cost variance 1 minus 5. Cost is adverse, efficiency also adverse, capacity is favorable, volume is adverse, volume also favorable, calendar also favorable, expenditure is adverse. How interesting, my dear friends. Hope all of you are clear. So this is how we have to approach. So we are able to complete this question also. Please take it, friends. Now, my dear friends, the last question in MQP set 2. This is set 2. It's a ditto of your study material question. Already two model question we did like this. That is price, usage, volume. They are asking. So I don't think this will come for 14 mark, but in MQP they came for 14 mark. So it is a very good question you can able to answer. So this is your MQP question, which is released in the 4th week of May, very last, recently only released it. So the same thing we have to do for the same variance, sales, the price, the material, all the variance, same formula also, answer also this. So the same thing, already we did two questions. So this is a study material ditto question. So already we did two previous year question. I believe this you can do. Same way they are asking the variance reconciliation also. So I request you to practice this question alone. So with this, our discussion on variance analysis is over. Now, after a short break, we'll go with what? Transfer pricing. So we are taking the topic which you told highest ranking. So which we got more vote, more request from students. We taken first. Accordingly, only we are taking. So this is the order we are planning. Okay, all the best. Yes. Now we'll go for transfer pricing. As per our current question pattern, as all of you are aware that one question from transfer pricing always are there. Whether it is a previous year or MQP, wherever it is, one question coming always. So this is one of the interesting area, one of the scoring area also. But you should have some basic details. So you should have some previous idea on transfer pricing. Then only you will easily able to track this topic. But however, some basic concept I will tell. Since this is a revision, we can't go in depth of the base. So what is a transfer pricing? Pricing when the goods transfer from one goods to another. What pricing the goods transfer from one division to another. From one division, if you move goods to another division under the same organization, what is the price to be charged? That is a challenge under transfer pricing. In your regular class, you might have been learned different methods. So what we are going to do is, we are going to highlight the few problem in the class. We are going to solve the few highlighting problem which is come under previous year questions and also MQP. So before proceeding transfer pricing, you should understand or revise residual income, ROI concept, opportunity concept, everything. So you have to revise this concept very well because we are approaching these type of questions. Residual income, we have a formula. What is the formula for residual income? What is your divisional profit minus capital employed into cost of capital? Similarly, we have ROI, we have a formula. Opportunity cost, anyway, we will discuss the problem today. So, in a transfer pricing, some basic data you have to remember that what is the maximum transfer price one will pay? Anyone will pay maximum transfer price will be market price. No one will pay beyond that. Why? Because if your transferring division is asking any price above the market price, why should you buy from him? You can buy from market at a market price. So maximum everyone will pay only what? Market price. What is the minimum transfer price? Minimum transfer price will be the variable cost. Minimum transfer price will be the variable because you want to transfer a goods to the division. So you have to produce it. So you will incur some incremental cost, variable cost. That will be the charge. So generally what happened now, you all know that. This is a very interesting point. See, each division is independent. Each division is what? Independent. So what is the speciality of in this case? Each division is independent. Each division want to maximize their profit. Each division want to maximize their profit. So what happened in transfer pricing case it is? What happened in transfer pricing case it is? In this situation, each division want to maximize their profit. So what will happen in this case? This transferring division will try to sell at market price because you tell that I need market price at least. Similarly, receiving division will try to pay at a variable cost because receiving division, if the goods are receiving at a lower cost, their cost of production will reduce so that their profit will increase. Similarly, transferring division, why they want to charge at a selling price? Because that is the highest market price they can charge. So their revenue will increase. If the revenue increases, cost remains same, they will get a higher profit. So what will happen now? This kind of conflict happens. So generally, you go sometime negotiation based method or a profit plus method where you will fix a transfer price between variable cost to market price. This is generally you fix the price. We have lot of method you might have learned standard costing plus pricing, variable cost plus pricing, or we have opportunity cost dual pricing. When there is a no price fixation is possible, then we can go for negotiation based pricing, opportunity cost pricing, market price based costing. So we'll discuss few important areas which are regularly coming for exam. We'll discuss few important area regularly. Though we say variable cost is a minimum transfer price, if it is any opportunity cost, then your minimum transfer price will be what? Variable cost plus opportunity cost. Variable cost plus opportunity cost. So in this session of revision also, we will discuss opportunity cost concept also for you. It will helpful for you to understand. With your permission, we are starting. Directly, we are going to start with question number 8, which is a previous year question recently came for December 24. So hope all of you are ready. So let's start. Roxing Limited has two divisions, M and N. M manufactures the product A15, which it sells in outside market, as well as division N, which process to manufacturing Z25. The manager of division N, which process to manufacturing Z25, N has expressed opinion transfer price is too high. The two divisions enter into discussion to resolve the conflict and supply with some information. Division M has been selling 50,000 to outside A's and 10,000 to N. That is 50,000 outside A's, 10,000 transfer. Both are at what? 25. That is why receiving division is telling your transfer price is very high. It is not anticipated the demand will change. The variable cost is 15, fixed cost is 3 lakh, divisional investment is 12 lakh. The manager of division M anticipate that division M will not transfer a price of 22 if it does not sell to N. That is minimum they will charge what? 22. If it does not to sell to N, 40,000 fixed cost and 2 lakh of assets can be avoided. The manager of M would have no control on the proceeds. Primarily, see the point, we discussed different method here. So here we discussed ROI, one of the method for determining the price, because each division manages one profit. Because more the performance, then only they will get promotion. They said that the price is determined solemnly on the based on what? Rate of return. Analyze, should the manager transfer at 22 or not? So they are asking, will they transfer at rupees 22 or not? So very simple. You have to compute what? What is the ROI? You have to compute what is the ROI. If you transfer at 22. If you do not transfer, what is the ROI? So which method your ROI is best only you choose because his performance is measured on the basis of ROI. So he don't have no feeling. He will think which route he is getting better ROI. Can you please tell me what is the formula for ROI? What is the formula for ROI? In this case, profit. Profit means divisional profit by divisional investment into 100. So investment they given, we have to approach here. So statement showing computation of ROI. We have case 1 transfer at 22. Case 2 do not transfer. So we want to find out the profit. Profit is sales minus cost. Profit is what? Sales minus cost. So sales. What is the external sales? You are selling 50,000 unit at 25. Here also the same. What is the right now sales? 50,000 to outsiders. So here, if you transfer here, this will be the number, correct? 50,000 outsiders, 10,000 transfer. Here, do not transfer, you will sell only what? 50,000. So here will come what? Your transfer income. You are transferring at what? 22. Here, 0. Why 0? Do not transfer. Do not transfer, nothing will come. Our intention is to find out the profit. So we found out the sales. Now we have to less cost, variable cost, units into 15 rupees. So here the unit is 60,000 into 15. Here the unit is 50,000 into 15. Now we have fixed cost. Fixed cost they mentioned very clear. They have a fixed cost of 3 lakh. And very important, if you do not transfer, they tell that your fixed cost will reduce by what? 40,000. So it will be what? 2 lakh 60. So now you can get your profit. What is your divisional profit? Now you can go for what is your divisional investment. Investment they given directly. Your investment is 12 lakh. Here they said that your investment is what? 2 lakh will be reduced. So it will be what? 10 lakh. So you can go for your ROI. What is your ROI? 3 by 4 into 100. Here will come. Tell my dear friends, if you do not transfer, if you do not transfer, if you do not transfer, you are getting 24%. If you transfer, you are getting only what? 22.5. So what will be the comment? Since ROI is greater than if do not transfer, thus will not transfer at 22. See, understood friends? So this is how we have to approach. Next we are asking, if you transfer, what will be the transfer price? They're asking lowest price that you can transfer, reverse way. This you have to do what? Reverse way. So can you please make it? Reverse way means what? You will transfer, you will reduce the price at equal to at least 24. That is, you should get an ROE of at least what? 24. Because if you do not transfer, you're getting what? 24. So you won't go for any option where you're getting below 24%. Are you clear? You won't go for any price below 24% because you're getting already 24% if you do not transfer. So you have to go reverse way. Transfer price, you have to put it as X. So shall I start or do you want to complete? Hope all of you are clear. So how to approach friends? If they transfer, minimum they should get what? 24. So how to approach? Let transfer price as X or transfer price. So what will be the revenue? 12 lakh 50 plus 10,000 X. So you should get 24%. So reverse calculation. 24% you should get. That must be equal to your revenue 12 lakh 50 plus 10,000 X minus cost. What is your cost? If you transfer, this is your cost 12 lakh, 9 plus 3, 12 lakh. Divided by your investment. Coincidentally, both are 12 lakh. If you sold this, you will get that. That means you should get at least 24%. Why 24? If it is 23.9, your performance is reducing. You won't do that. So you can do cross multiplication. 12 lakh into 24,000. What you will get? 12 lakh into 24%. 2 lakh 88,000. So 2 lakh 88,000 is equal to 50,000 plus 10,000 X. Why 50,000? 12 lakh 50 minus 12 lakh. Now X is equal to 2 lakh 38,000 by 10,000. You will get 23.8. Yes, you will transfer. You won't go for 22. You will go at 23.8 because 23.8 your ROI is what? 24. That is same as do not transfer, so no impact. How you got to 2 lakh 38,000? 2 lakh 88 minus 50,000. 2 lakh 88 minus 50,000. 2 lakh 38 divided by 10,000 X. So you get 10,000 equal to 10,000 X. So this is how you have to get. Your answer is over. So hope you are clear. So this is how you have to approach. So give the comment. The minimum lowest price you will keep it equal 23.8. Now we'll go with a MQP question on very good question. Key factor analysis, everything is testing, which is came from your MQP. Question number 11. So we'll go for question number 11. What is question number 11, friends? Division A is a profit center which produce three products X, Y, and Z. Each product has an external market. The details is given below. External market, variable cost, labor cost. They can the product Y can be transferred to B, but a maximum quantity of what? 300 of Y. The demand is given. So the market they can buy at 45 rupees. Calculate the transfer price of 300. So the point here is what? A is already running at a limiting factor. Now they are getting extra order from B for 300 units of Y. Here comes the key factor concept, that is limiting factor, otherwise called opportunity cost. So if you want to get this, first you should do your normal marginal costing, statement of ranking and allocation. Then only you can get the opportunity cost. Because you have to compromise your existing production, then only you can be able to fulfill the demand. So what is the first step? This is a one very good model in transfer pricing. So one model ROI RI basis. In that ROI one question we did. Now this question is purely based on what? Opportunity cost. So first you can go for statement of ranking. So hope all of you are clear. Our normal ranking statement only. You have to take your key factor. What is a key factor? Labor hours. Now you can go for ranking. So what is the ranking? Highest ranking will be given as rank 1, rank 2, rank 3. The meaning is what? This is for key factor checking. That is, if the labor hour availability is only less. So you have to give according to this allocation. That is the purpose we do this. So now you can go for what? Statement of allocation. Here, they given case 1. What is the case 1? 3,800 hours. We have two cases. So the first one, 3,800 hours. So if it is 3,800 hours, what will happen? Total available, we have what? 3,800. So in that, who is the rank 1 will give full. Who is the rank 1? Which is Z. So Z, what is the requirement? Z market demand 300. So we will fulfill full. Who is the rank 1? His market commitment will be fully made. So if you want to make 300, what is the labor hours required? 2 hours. So 600 will be taken. We have balance. That will go to rank 2. Who is rank 2? Y. So Y, what is the requirement? We will fulfill 500 into 4. So 500 into 4. So if you fulfill this 2000, here come the problem. If you give all these hours, then you have balance is only 1200 hours. Balance is only what? 1200. Your rank 3 is X, which 800. 800 into 3, you require 2400. That means you don't have no sufficient. So that what happened? This 1200 balance will allocate to rank 3. Who is your rank 3? Balance to rank 3 X. In marginal costing, you will find out number of units and row. Here not required. Here hour based only required because we are intention is what to find out the hours. Now we are going for the main statement that is called statement of transfer price computation. See, any point, our minimum transfer price is what? Variable cost. So they require 300 units of work. Now just listen very well. Even if you miss in your regular class, you can understand now. If any department requires 300 units of Y, first you have to produce it. So you will incur variable cost. So that is the first point, variable cost. What product they require? They require 300 units of Y. So the variable cost of Y will be required. So each unit of Y, variable cost is what? 24, which is the minimum cost. Now you have a key factor. So you should have opportunity cost. That is the next point, opportunity cost. The opportunity cost we have to find out. First, you have to check opportunity cost is there or not. If you want to get opportunity cost is there or not, first you should identify what is the labor hour required. In order to fulfill your requirement, 300 units of Y, each unit of Y you require 4 hours. So 3000 unit you require 1200 hours. Do you have any surplus hours? See, here already we are not able to fulfill our demand. Suppose if we are able to fulfill our demand, then we will have excess. But here there is no hours. See, we fulfilled the Z requirement, Y requirement. X requirement still pending. At the time only your sister concern is asking, can you transfer 300 unit of Y? So what will happen? Again, there is a opportunity cost comes. So there is no surplus hours. So you require how many labor hours required? 1200. So labor hours required is what? 1000. So you will take in this kind of terms, what you will take now? Who is the lowest ranking? You will pick it. In your ranking statement, who is the lowest rank? X. So you will pick from X. If X it is not there, you will go for next ranking. In this case, X exactly 1200 is there. Suppose if X only 700 is there, you will take from X 700. Still you require 500 because 1200 is your requirement. 500 you will require take from next best ranking, that is Y. But here you require 1200. Already everything with X. So what will happen? 1200 is with X. So what is the contribution lost on X? That will be your opportunity cost. Contribution per hour is what? 5 rupee. So that is your opportunity cost. So 1200 into 5. What you will get? 6. Suppose if it is 700 is there, what will happen? It is very interesting. 700 into 5, then balance you're taking from Y now, so which is 500 into 5.5. But here it is nothing like that. So you add both together. Variable cost plus opportunity cost. This is your total transfer price. They are asking transfer price per unit. How to do? 7200 by 300. You will get an answer called what? 24. What's the market price? Market price is 45. Once again, 1000. Once again. Once again. Variable cost 300 into 24. So your transfer price will come 44 rupees. Your transfer price will come what? 44 rupees. So your 44 rupees, market the price is what? 45. Market the price is what? 45. So you will buy from your transfer individual. Suppose if the market the price is 40, then you won't buy from transfer. You will buy from what? Market. This is how you have to approach a very good question. So part 1 only given. Here we discuss for what? 3800. Now they are asking for what? 5600. That I request you have to try. Come on, friends. My dear friends, so this is how you have to approach. First, you have to understand that in this question, we have two departments, Department A and Department B. Department A is producing goods. Department A is producing goods. They are producing X, Y, Z. They may produce any combination based on their ranking. In this case, this is the ranking, so they go this kind of allocation. Sometimes Y may be the lowest rank, Y may they produce. This ranking has to do nothing with this data. This data is what happening is your another department B is asking, can you give me additional 300 units of Y to me? You are selling outsiders this many unit. Can you give me to me? So if you want to fulfill his requirement, what you have to do? You have to cancel your external sale. You have to cancel your external sale and you have to fulfill the demand. So which item you will cancel? Which is your lowest rank? In this case, your lowest rank is X. You cancel, you give it. That is why X opportunity cost you take care. Suppose if Y is coming rank 3, then why you are selling to external market, you will cancel, and that will be your opportunity cost. So it's a strategic format. If you understand this format, any type of question you can able to solve it. So please copy fast and try for the next case. Please try for the next part. That is 5,600. Yes. Hope all of you tried. So it will become 5,600. So in this case, what will happen? You will have surplus. Rank 3 X 800 into 3. So hope all of you done this. So surplus, there is no opportunity cost. Surplus, there is no opportunity cost. So let's see how many of you got the correct. You have surplus of 600. So labor hour will become 600. So you will take from the X only. So here no need of going for other products. So transfer price will reduce. 10,200. So hope all of you are clear. So this is how we have to approach. Logic remains same, but you can easily able to solve it. Come on, friends. So in this question, twist or less, in the regular class, we discuss such a question where you have to take from 2-3 products. So you have to revise such kind of question also. So it we have discussed in our regular session. So please revise those type of question. You will get answer 99.18, 118.8 that question. Then you have to take from 2-3 questions. Here we are taking MQP model questions. Okay. Now we'll go for another previous year question. Question number 9. Similar question we have also in our study material also, but number everything is different. So shall we start, friends? All of you ready? MN company is a profit center having division X and Y, making product X and Y respectively. Each unit of Y require 1 unit of X and Y can sell maximum 1 lakh unit in a external market at a selling price of what? 200. X has the capacity of 2 lakh unit of X. Variable cost per unit is what? 15. Fixed cost is what? 15 lakh. X can sell the following quantities in the external market. See, you know very well. As the selling price reduces, demand also increases. So they have given different perspective. Y can purchase requirement from external price at what? 35 per unit. So they can get from market at 35. So why is that receiving division they can buy from market at 35? As is the best strategy for XA. No demand from what? Y. That means first case there is not at all a transfer pricing question, a marginal costing question on pricing. So what is the pricing you will do? You will fix such a price where you will get the highest profit or highest contribution. Since your fixed cost is constant, you will go with contribution perspective. Calculate the minimum transfer price agree if X has to supply 1 lakh unit to Y. Then if after accept partial supply, assess recommend what will be the X strategy. No compulsion to transfer maximum unit, calculate the X to transfer corresponding price. So shall we start, friends? So first you have to do contribution statement. One lakh 16. The variable cost is 15. So you can get contribution per unit very easily. Selling price minus variable cost. So what is the total contribution? So which is the level you get highest, that is the best. So which is the best, friends? Selling price of 40. So they were asking. So best strategy to fix selling price of rupees 40 per unit and sell 1,25,000 units. Hope you are clear. We want to reduce the fixed cost. Fixed cost is what say. So that's how you have. So now how to approach next part onwards. Next day, minimum transfer price for X if agree if X has to supply 1 lakh unit to minimum transfer price. See, minimum transfer price is variable cost. What is the variable cost? Variable cost is 15. Minimum transfer price is equal to rupees 15 per unit. Up to how many units? 75,000 units. Why 75,000 units? Because he has 2 lakh capacity, out that 1 lakh 25 only. What about balance 25,000 unit? Balance 25,000, there is an opportunity cost. Balance 25,000, there is an opportunity cost is there. What is the opportunity cost? That is, you can get another way. If you are transferring, or another way, we can go simple way. That is 1 lakh unit if you want to transfer. What is the amount you will get it? Reduction in contribution, you can just see. Reduction in contribution will be 31 lakh 25,000 minus 30 lakh. So what is the answer? 1 lakh 25,000. So what is the contribution? Transfer price is equal to variable cost plus contribution foregone. 15 plus 1 lakh 25,000 divided by how many unit we are transferring? 1 lakh. So what is the price? 16.25 per unit. Are you clear? I'll repeat once again. See, you will sell at 40 rupee 1 lakh 25. Now he want 1 lakh unit. If he want 1 lakh unit, you have to sell at 1 lakh. You will get 45 rupees, but 30 lakh only your total contribution will get it. That is, your contribution will reduce from 1 lakh 25. That you have to get from the transfer because you are having opportunity cost. If you sell, you will get 30 lakh. So this is the opportunity cost you are having. So it's an opportunity cost is your contribution forward. So you will fix what? 16.25. This is how you have to approach. This is the proper way we have to solve it. Logic clear, friends? How you got this 1 lakh? Why you got 1 lakh? Total capacity 2 lakh. So 1 lakh external sales. So balance will be what? 1 lakh. That is the logic. We'll go for next part. Next part is the direct question. What is the next part? If Y agree to accept partial supply, assess and recommend what will be the X best strategy under no compulsion to transfer the maximum unit. Calculate the quantity X will agree to transfer corresponding to price. Assume that both division agree to share the benefits of transfer equally. Similar question is also in your ICMA material. So the same logic only will work it. So how we will start, friends? If no compulsion to transfer, no compulsion to transfer, then X will transfer only 75,000 units. Why 75,000 units? 2 lakh is the capacity. They are getting their maximum profit at 1 lakh 25. They have idle capacity only what? 75,000. So 75,000 units. That is their ideal capacity. Are you clear? So if you there select idle capacity, what is the variable cost? 15 rupees only. That means for additional production of 75,000, you will incur only 15 rupees. This is your variable cost. What is the market price for Y company? Y company, if they want to buy from market, they have to buy what? 35 rupees. Understand, friends, if Y company buy from market, they have to pay 35 for any one unit. So in-house, the balance 75 is ideal. So that 75,000 if you produce, you will incur only 15 rupees. So what is a savings per unit? Savings per unit is 35 minus 15, 20 rupees. 35 minus 15, you will get what? 20 rupees. Now what they're telling, benefit is shared equally. So what is a transfer price, friends? 15 plus 10, which will be what? 25. Or otherwise, 35 minus 10, 25. Vice versa, you will get the answer. That means 15 is a transfer price. Because of this effect, company as a whole getting a savings of 20. Sir, sorry, sir. I don't understand how the company is getting 20 because if Y is buy from outside, they have to pay 35 rupees. If in-house, ideal unit, you incur only variable cost 50 rupees. So company is getting a benefit of what? 20 rupees. And that is very clear that the benefits is shared equally. So 20 units equally means transferring department 10 rupee, receiving department also 10 rupee. That means 15 rupee their cost, 10 rupee their profit 25. Or 35 rupees is their paying from outside, 10 rupee the savings of in-house. So both the way your answer is ready, 25 rupees, my dear friends. Similar question is in your material, but that is a little lengthy, but this is little bit easy. That question is including transportation adjustment also we did in our regular class. So hope you are clear. Please take your own time and complete, friends. Please. Hope all of you are clear. Now we have another one MQP question, which is similar question is also in your material. Can you just try question number 12, friends? Similar logic. Question number 12, you can just start solving, friends. If you want, I'll also help you to read. A company is organized on decentralized lane with each manufacturing division operating as a separate profit center. Each division has full authority to decide on sale of the division of the output to outsiders and other division. Division C always purchase requirement of a component from A. So they are buying from A. But when informed that A is increasing the selling price to what? 150. The manager of division is decided to look outside supplies. They can buy from outside buyers at what? 135. That means outside you will get 135. They're asking at 150. But division A refused to lower the price in view of the need to maintain their margin. Top management has to follow information. These annual purchase 1000, variable cost 120, fixed cost 20. So this you can solve very easily if you understand the base introduction revision I have given in the beginning of the session. Will the whole company will get whole benefit? The division C buys from the component one at 135 from an outside supplier. So what is your answer, friends? So division A. So I will give you some time for you to read. Can you just read an update? So please read, friends. You can solve. Shall I? Ready, friends? Good. So first, will the company hold benefit if they buy from outside? We know the scenario very easily. Similar question is also we did in our class. See what is the in-house cost? In-house cost is variable cost only, which is rupees 120. In-house cost is 120 only the variable cost. Because fixed cost, whether you produce or do not produce anyway, you have to incur. So company as a whole incur only what? 120. So what is the market price? Market price is what? 135. So what will be the comment? Comment will be company will not benefit. Now some friends may have doubt, sir, how it will be, sir. I don't understand, sir. For them, though it is not part of this question, I would like to help you that. We have two division A and B. I will tell you how it will be. The A, let's say they're transferring at 150. Their incremental cost is variable cost only, which is 120. They will get a profit of what? 30. Now, B selling price is not given. For your understanding only we are doing, let's say B selling price is 250. The variable cost is what is the transfer price, which is 150. Let's say another on cost of what? 50 rupees. Another cost. So their profit is what? 50. Company as a whole getting a profit of what? 8. Now what happened now? You won't buy from A. If you won't buy from A profit will be what? 0. A profit will be what? 0. Yes. Now we'll take case 2. They're buying from outside at 135 because we are getting cheaper now. So your profit will be less. So you're buying at what? Selling price will not have no impact. Your cost 135 only, 50 rupee other cost. So see, instead of 200, obviously it will become what? 185. Are you agree? So this is not a part of answer for making the logic proper because for unlikely we don't have such kind of example as a whole. So I'm doing with this example so that you get understanding. Now see, here you have 0, here you have 65. As a whole, you are getting only what? 65. In this route, company as a whole getting at what? 80. Here, company as a whole getting what? 65. So which route company as a whole benefit? 80. For B perspective, second case. A perspective, first case. That is different. So this type of very good question we discuss in our regular class. Be very clear on that. So here, since MQP, one small question is there, we have revised the same for you. So company will not get any benefit. Going further to the question, if division A did not produce for C, it could use the facility for other activities for cash operating savings of what 18,000. That means there is an opportunity cost. So what will be your in-house cost will come 120, that is your variable cost plus opportunity cost, that is 120 plus 18,000 by 1000, you will get 138 per unit. What is the market price? Now you tell me which is best day. Now what is the best day? In market you buy it is 135 only. Here because of the opportunity cost, because you are missing that. If you use for this product, you can't use that. So the opportunity cost is there. So comment buy from market. So answer is very small. 7 mark question. Answer is very small. Now we can go for the last part. Suppose there is no alternative use for EA facilities. Market price per unit drop by 20. So what will happen? In-house cost will not change. In-house cost will not change, but market price reduces by 20 rupees. So what will happen? 135 minus 20, 115. So market is less. So here also you will buy from market. So the question is over. So hope you are clear. You can press copy. Come on, friends. Now, my dear friends, we have only one question pending. Question number 10, December 2023. It is similar to our first question we did ROI model. Question number 8 we did the similar model ROI model. If you check, they will ask the same point. They can reduce 8 lakh, stock can reduce, asset, the same point. They can transfer at 50, they're willing to balance. It means it is similar to our question number 10, that is 12. So same format, same way if you do this, this is the answer. If you transfer to division and outsiders, you're getting ROE of 13.7, 17.5. Same way we did similar question already. If you sell to outside party, you will get 46.4. So this is same format. We did already question number 12. So if any friends having a doubt, because as a part of covering all these previous year question, we taken this question, but it is same format, same manner. You can just check it. I'll just wait also. So you can just go through. So this is the answer. So the comment also, we know higher the ROI, better the option. So accordingly, we'll fix it. So with this, we were covered the transfer pricing topic also. This we were covered the transfer pricing topic also. So this is how we have to make it, friends. Any other question? Yes, we have covered. See, apart from this point of MPQ and previous year, in your regular class, we might have done the profit analysis. We did one question. Compute the profit of A, compute the profit of B, total profit, then give the comment when is the A profit high, when is the B profit high, what is the overall profit. This kind of analysis question also you should be keep on. And in this revision session, we did only ROI based. In our regular session, we did RA based also, residual income. That is your sedimentary question, also a previous year question. In RA based question, Right now, you will get a question called the alpha beta question. Alpha having a, RI of 120 lakh, beta is 100 lakh. So those type of question, that is your sedimental question only. That is also relevant because last exam if ROI came, this exam maybe RI also came. So alpha beta one question is there in your workbook or your ICMA sedimental also it is there. We did in the session. So please revise that also. Okay. Since in this pattern, our focus is to go through previous year question of 22 syllabus and NQP. So we are not discussing the same. Okay. So this is for the topic called transfer pricing. So friends, now we will move on to another interesting area called activity based costing. Otherwise ABC. Activity based costing or otherwise ABC. A very good question. It is a 7-mark area. It is not a pakka compulsory area, but we have three options: ABC, target costing, throughput costing. Either of the three always coming. Majority time ABC is coming. Out of the last 3 attempts, 2 time ABC question came. So that is why ABC is an important area. So it is also covered in your intermediate. So ABC, we are computing the cost. It is not just by a single recovery rate. We have a recovery rate for all the activity. That is, we find out the recovery rate activity based. That is why this is called a activity based. That is why this is called as activity based costing. So how you will do a standard question? A standard question on ABC will come. Calculate cost under traditional basis. Calculate cost under traditional basis. Then they will ask cost under ABC and compare the difference. This is the 2 points they are asking. So cost under traditional basis, cost under ABC, then compare. This is generally a 12-14 mark traditionally coming for CMA final, CA final and all. But very unlike that, right now we have 7 mark. So they may not ask all these perspective, but still we have a question on December 24 over these 3 for a 7 mark also. So this can be asked in different way. So we have to practice very well so that we can save the time so that we can complete in 7 mark. So under traditional basis, very easy. Material, labor, if any direct expense up to train cost, whether it is ABC or traditional will be same. Under traditional basis, overall you will take in a single recovery rate that will be given in the question. It can be machine hour, labor hour, or any other method. So you will get your total cost. Under ABC, what you will have total cost is segregated into each activity. We generally call cost pool. Then we'll identify the cost driver. What is driver? The factor which determines the cost of an activity. For each activity, you have to identify a suitable driver. Some exam they will give directly. They will give setup cost. Driver is number of setup. Ordering cost, driver is number of orders. They will given directly. But some exam, they may not given. We have to identify a suitable driver. We have to identify a suitable driver. Once you identify the driver, find out the total driver, then you have to find out one and only one thing, CDR. In a single recovery rate, we call overhead recovery rate. But in activity-based costing, we call CDR. What is CDR? Total cost of an activity divided by total number of drivers. So once you get the CDR, then you can just set recovery rate on the base of recovery rate or CDR you can apply. That is one of the easiest area. So identify the cost activity wise, identify the suitable driver, find out CDR. This is the only task. So hope you are ready. Let's revise the question. See, this is all one of the easiest question where already they have given what is the cost for each activity. Sometimes they may not give, they will give total cost. They will give percentage. We did in our regular class also. So that percentage you have to multiply, then you will get it. Sometimes they won't give a total amount. You have to get reverse way. Traditional, what is the total amount? Same only ABC. Total amount, only everything same. Only the presentation only will change. That is the difference between ABC and traditional. So let's start. A company produces 10 batches of each 15,000 unit in a year. It incur the following overhead thereon: material, maintenance, setup, quality control. Prime cost they given already. So there is only one product. The company using the current method of absorption overhead on the basis of prime cost. They want to shift it. So now they are charging on the basis of prime cost. Now they want to shift into activity-based costing. Information relevant to activities given below. So number of purchase order, maintenance hours, number of setup, number of inspection. Company has a batch of 15,000 unit and has incurred a 26 lakh 36,000 material of wages. So they are asking batch wage cost. The usage of activities for the batch also given. You are required to calculate cost per unit on absorption basis of the said batch and also assess the cost driver for the batch. So we have all the data. Shall we start, friends? So we'll go for first traditional basis. They are asking for what? Absorption cost basis. Traditional basis method only we call absorption cost basis. Here it is not basis or not labor hour. It is percentage of prime cost. It is percentage of what? Prime cost. So what is the total overhead? Total overhead we have to add all these expenses, which is 22 lakh 50,000 plus 17 lakh 13,000 plus 6 lakh 84,500, 5 lakh 14,800. So what the total? 50,300. What is the total prime cost? Total prime cost 3 crore 1 lakh, not even 3 crore. So we can make it overhead rate. It is any expense we do percentage basis. So let's see what is the percentage. 17.2 percentage. 17.18 percentage. Now, statement of cost under absorption costing for the batch. We are doing for the batch. So how you will do? You can find out what is the prime cost. They are given material. What is the material? 26 lakh 38,700. Direct labor 3 lakh 75,200. This is what is called a prime cost. Now we go the recovery rate you have to add. Under traditional basis, we will have a single recovery rate. It is all the overhead are a percentage of what 17.18. So point number 3 into 17.18 percentage. That's all. This is what is the disadvantages of traditional basis. Traditional basis are not identifying each activity. So total factory cost or total cost. This is the answer. Now we are going to do under ABC, my dear friends. I know all of you are ready. I'm also ready. Under ABC, first you have to find out what CDR. Under ABC, first you have to find out what CDR. What is CDR? Cost driver rate. What is the formula? Total cost of an activity divided by total number of driver. Total cost of an activity divided by total number of drivers. So we'll start. Now we'll go for CDR. So total cost of an activity divided by total number of drivers. Here a very good point is that suitable driver they are not given, so we have to find out. So statement showing computation of CDR. Material procurement, maintenance, setup, quality control. What is the amount? 22 lakh 50, 17 lakh 30, 6 lakh 84 500, Now we have to identify the driver. Suitable driver you have to find out. Here not given. So material procurement, what is the point? Number of purchase order. Maintenance, what is suitable? Maintenance hours. Setup, what is a suitable number of setup? So here they are not giving much twist. Sometimes they'll give different order, they will give you twist. But here there is no much twister there. Number of inspection. Here you can go for total driver. That is total of purchase order. So what is the total purchase order? This is for the year. This is very, very important. You have to take for the whole year, for the whole products. If it is 3 products, you take 3 products. Here only 1 product. If it is 3 products, 4 products, you take 4. We did in the class 3, 4 products. So how we did? We have added all the product total. So here, whole year. So whole already given. So you can go for it. Okay. So we can proceed. Here there is directly given, so not listed code 1500 9080 2250 2710. Now you can find out the CDR. What is a CDR? Already we discussed total cost of an activity divided by total number of driver. We get the numbers. Generally the CDR will be a round number. Generally the CDR will be a round number. Now we can go for statement of cost under ABC. See, my dear friends, whether it is ABC or traditional basis, up to prime cost, everything will be same. Up to prime cost, everything will be same. So if you want to save your time, you can also directly take prime cost total, or you can show step by step breakup. If you want to save time, you can take directly prime cost total, which you have already found, or else you can do material labor accordingly. Now you go with activity. Here come the ABC core area. Here you have to add overhead. How you do? Each activity separately. What is the first one? Material procurement cost. Material procurement cost, how it will come? See, for each procurement 1500, for this batch How many procurement we have done? We have done 48. Here they are given direct order. Generally, this is a previous year question which came for December 24. But generally, they'll give different order. The order may be given in a ulta order. But here they given directly. You are very lucky. 48 into 1500. Like this, we have to do for. What is the next one? Maintenance cost. How can you do maintenance cost? Again, the same way. 810 hours. For each hour, 190.53. Like this, we have to take it. So 48 into 1500, 810 into 190.53. Like this, we have to take it. What is the next item? Setup cost. 40 setup, each setup 304.2. Next what? Inspection cost. 25 inspection for this batch. So both will not be the same amount. Slight difference will be there. This is why both are different. So if I am taking overhead under ABC is 2 lakh 43, but here it is 5 lakh 70. That much difference is there. So this is how you have to approach. So hope all of you are clear. Analyze the total cost under set batch on activity based costing. So you have to make a table. Under ABC, you are getting 35 lakh 31. Here you are getting 32 lakh 57. So here you are getting lower the cost. The reason also you can make on the base of activities. So the activities are less, so costs are less. But whereas, what is the problem under ABC on a traditional basis? If your material price is more, labor price is more, or also more, because you are taking on the basis of what? Prime cost percentage. That is the problem. Here you don't do that for method. You go properly with a activity base. So activity is there, cost is there. If activity is not there, cost will not be there. So the third part is a theoretical question where you have to compare both the answers. This came as a December 24 exam question. Here they are asking what is the cost per unit also. So if you want, you can do per unit cost also, because the question is asking cost per unit. So please add cost per unit also. Cost per unit, we have produced 15,000 units. So please reduce. That's all. We're asking for cost per unit. So we can divide. So here will come 235. That's all. So hope all of you are clear. So once you complete it, we'll do one more previous year question. This came for December 23 also. So throughput costing, target costing also relevant for you this attempt. Okay, friends. Shall we? Okay. Now this is 7. This is a perfect 7-mark question. You won't take much time. A lesser time only. It's a bank operating. They given the details. See here very easy. Because they given activity, they given driver, everything. Providing ATM, what is the cost? What is the driver? So everything directly given. So you can go directly the CDR. Then they are asking for each product. 3 products are there. Checking accounts, personal loan, and gold visa. So how many transaction, computer transaction, telephone, calculate CDR and accordingly assess the cost. Can you please try? Yes. For me, it is just a 2 minutes time because I can directly divide. So can you please start, friends? First, you can go for statement of CDR. ATM service, computer processing, issuing statements, customer enquiries. So for the purpose, since we already done, I am going directly CDR. Already everything they given. What is directly CDR? Cost is 1 lakh, activity is 2 lakh. So 1 lakh by 2 lakh, 0.5. Here it is 10 lakh by 25 lakh, 0.4. Here it is 8 lakh by 4 lakh, 0.2. 8 lakh by 5 lakh. Hope all of you are clear. All of you clear, friends? Next, 3 lakh 60 divided by 6 lakh. So rather than giving the table, we have taken directly shortcut. Now you can go forward. Statement of cost under ABC. So checking accounts, personal loan, gold visa. You have to take each item. ATM transaction. How to do, friends? ATM transaction for every we have incurring 3 lakh. So 1 lakh 80. So what you have to do? 1 lakh 80 into CDR. Are you clear? Here it is 0. Here it is 20,000 into 0.5 like this. Computer transaction, $20 lakh. So 20 lakh into 0.5. Here we have 2 lakh. So 2 lakh into 0.4. Here we have 3 lakh. All of you clear? Concept clear? So we are just multiplying the CDM. Previous question was the same way. We multiplied with the CDM. What is the next step? Number of statement. In these two questions, not even changing the order also. But in the regular class, we did a lot of changing in order. That is a standard question. So number of statement, we have 3 lakh into 1.6. We have 50,000 1,50,000 last customer enquiries. What is the cost, friends? 3,50,000 into 0.6, 90,000 into 0.6, 1,60,000 into 0.6. So this is the total cost. Now, unit. How many units? We have units of, it is 30,000, 5,000, 10,000. So you can find out. They're asking cost per unit also. Here not additional. Your answer is wrong. So hope all of you are clear. So please take your own time and complete. Your MQP, there is no question on ABC. They are focusing more on target costing, throughput costing. So there is a chance of coming throughput costing, target costing also for your exam, because December 23 we have ABC, but June 24 we don't have no ABC. So that may be changing. But ABC is a regularly coming area. So if it is coming, it is nice point for us because good weightage also. So this is how you have to approach. So hope you are clear on this ABC concept also. So this is one of the easiest area ABC. You have to check the CDR, you have to compute the CDR, and accordingly on the base of CDR, you have to charge them. Yes. Now, my dear friends, we are going to the first question under descriptive area 2A. As all of you are aware that 2A will come from section B, first area, that is decision making using marginal costing techniques, which cover your marginal costing techniques, CVP analysis, make or buy, special order pricing, export pricing, and relevant costing. All these topics are key factor analysis. All these topics are covered, which is coming generally 14-mark question. So we are also approaching our same strategy. That is, we are going to start with previous year question. Yes. So we are going with that topic, which is coming always 14-mark question. So we are going to do 14-mark question. So my dear friends, revising this 14-mark question is not enough. You have to learn what we learned in our regular class, each topic. Because 14-mark essay is a consolidated question which cover all the topics, which may come relevant costing, which may come special order concept, which may come make or buy decision. 2-3 concept together. So when you prepare, you have to learn each topic separately and you have to start. So anyway, we will start with question number 2. Green Sense, a cement manufacturing company, produces 50 grade cement for which company has assured the market. The output as given below at 1,80,000 units. So right now they are going at a 1,80,000 units. The cost sheet based on output are given below. Material, selling price, component X, direct wage, factory overhead, direct wage 7 per hour and we use 28 rupees. That is 4 hours. Factory overhead 50 percentage of fixed 24. Selling and distribution overhead 75% variable. Admin overhead all are fixed. The factory overhead are applied on the basis of direct labor hours. So factory already is on the basis of direct labor hour only. To utilize the idle capacity to and improve the profitability of the company, following proposal was put by the company. So company want to improve their profitability. Company want to improve their profitability. So following proposal has been given. An order has been received from abroad for 6,000 unit of cement at 175 rupees. So they given the cost also. Material 56, 10 hours of labor. Selling and distribution applicable to this product is 14. Variable or chargeable on the basis of direct labor hours. Companies at present manufacturing component X, 1 unit for which required 50 unit cement, the cost detail for 15,000 units. So this is the data for X. X already they given the total amount is 9.4. So that 9.4 breakup only they are given in the down for a 15,000 which include material and fixed cost. The X is available in the market at what? 7.9. X is available in the market at 7.9. So present day statement of profitability of the company as envisaged in the budget. Evaluate the export order and state whether it is acceptable or not. Then third one, make an appraisal of proposal to manufacture compound X, state whether X should be manufactured in the product or purchased from the market, means make or buy decision also. So export order decision, make or buy decision, and also profitability. Three area they are asking. So see they are asking existing profitability. They are asking. So existing profitability, we can directly add all these expenses. We'll get it very easily. So so statement of profitability. What is the statement of profitability? Sales 1,80,000 unit at 130 rupees. 1,30,000 at 1,80,000. Now you have to reduce all the cost. Less cost. Shall we do variable fixed separately? Shall we do variable fixed separately? So that we can save some time. So less variable cost. Less variable cost. This is not mandatorily required. So what is the variable cost? Direct material. So 30 into 1,80,000. Component X, variable and fixed, we have to get through here. So variable, we can just add these point. Component X, 30 plus 52, 500 plus 25, 500. What is the total, friends? 30 plus 52, 500 plus 25, 500. 1 lakh. So 1,08,000 for 15,000. That we have to multiply with 1.8 lakh. So per unit it will be 1,08,000 minus 15,000, 7.2. That has to be multiplied with what? 1,80,000. So component X also ready. Direct wage, we have 28. 28 into 1,80,000. You can do total approach also. Can you do total approach or per unit approach? Total will be little easy, but since it is a 14 mark question, I am doing breakup base. So we'll go for breakup or shortcut method since it is a revision session. We'll go for total approach. Total approach now 1 minute we'll get it completed. So that, but exam purpose you have to show individually. Now I have given everything individually for you to approach exam purpose, but here we can just do in one line. Shall I change this? So we can do in one line less cost. Already the cost is given. Add all the cost 39.4, 28, 24, 16 and 5. Add all the cost because the cost based on the output per unit is given below. Because current capacity only they are asking. But I'm telling very clear, exam they're asking statement only. So you have to prepare item base. We are doing shortcut now, but you have to show item base. Now I have done up to material. You have to do the balance also. So come on, friends, what will come? What is the per unit cost? Can anyone tell what is the cost up to this? Breakup is not compulsory for doing next questions. What is the per unit cost, friends? You have to add all the three costs 39.4 110 into 1,80,000. That's all. So here in the revision session for time saving purpose, exam halls sometimes this will entertain, but sometimes this will not entertain. Profit from existing. That's all. Answer. 35 lakh 64,000. Your study material they might have been done very bigger level, but the same profit only they might have been quoted. I think December 24 only. So this is the suggested answer. See, the total is 112.4. Who said it is? I think it's wrong. Total is 112.4. I think you have done. See, the total is 112.4. Correct, friends? So you have to check correctly because I remember the final answer. 112.4. Correct? See, the answer is over. Same thing only in your suggested answer. They have done lengthy calculation, but we did similar way. See, they did 31 lakh 68. They did variable separate, column separate. But that only we have started doing, but we split into the point. No need of bigger statement. Final way we are getting the same answer only. So hope you are clear. We'll go for the second part. Are you ready, friends? What's the next point they're asking? They are asking evaluate the export order acceptable or not. So we have to make statement of profitability for export. Yes. What is the sales price? Export we are charging 175. We know incremental cost only will take for export. So we have to reduce all the incremental cost. What are all the cost? Material. What is the material cost, friends? For the export, material is what? 56. This is a different grade. So you can't take from the beginning. So you have to take from here. Material 56. Labor. What is the labor? 10 hours. So 10 hours. What is the hourly rate existing? 7 per hour. That you can take from the top data. So 7 per hour. Variable factory overhead. So you have to take the variable factory overhead. What is a variable factory overhead? Variable factory overhead you have to check from here. See 12 rupee for a 12 rupee we are charging for 4 hours. So 3 rupees per hour. Existing fees compare fixed overhead 50% fixed. So 24, 50% fixed means 12 rupee will be the variable. How many hours? 4 hours. How you got 4 hours? 28 for 7 per hour. So 4 hours. So 4 hours you are entering 12 rupee means hourly will be what? 3 rupee. So 3 per hour you are using 10 hours. So 10 into 3 you will get what? 30. Hope all of you are clear. Next is what? Selling and distribution cost. 14 per unit. They said per unit only. You get 170. So what is the incremental profit? Additional production, additional non-fixed cost. So what is the incremental profit? 5 rupees. So what is the comment? Accept the order. Moreover, we have ideal capacity too. How can you know it is ideal capacity now? 90% only. That is 10,000 we have still balance is there. So you can able to sell ideal capacity we have. So now we can go for the last point, which is called make or buy decision. Make or buy decision. So for which product? X product. So what is the cost of buy? Cost of buy 7.9. What is the cost of make? Cost of make only the variable cost. So we have added already the point 30, 52, 500, 25, 500. What is the total of these three? 1 lakh 8,000. Divided by how many units? 15,000. Already we did the total earlier 7.2. So tell my dear friends, we have done separately cost of make and by n number of questions. So cost of make is less than cost of buy. So what will be your decision? What will be your decision? Make in-house. This is how you have to apply. Hope all of you are clear. Please take your own time and copy. So this is a 14 mark. It's over now. So 14 mark question, though it will be lengthy, but if you understand very well, it will be very easy. If you understand very well, it will be very easy. So please take your own time and copy, friends. So mm, So hope all of you are completed. Now we'll go for next question. We can move to the June 2024. I think June 2024 also similar model question only they given 5,000 data, material, labor, everything they are asking. So that is same model. We'll go for December 23, where there is a relevant model question, relevant costing and relevant question. So this you can practice. This is similar model question we discuss, similar perspective. So we'll go for December 2023, where the question came from which model? Which came from relevant costing model. So we'll go with that is a very good question. In the normal classroom session, we did lot of relevant costing. So I hope all of you recall the relevant costing. If a material is already in the warehouse, no use, then the relevant cost is what? Net realizable value. If it is substitute use, then net realizable value or substitute whichever is higher. If it is already used for regular production, then replacement cost. Then if it is not in the stock, replacement cost. So this kind of point you have to remember. In the regular class, we discussed a chart also, how to recall this point. Similarly, we discussed the labor. What is labor? If it is a permanent employee and he is busy, then contribution forward only. If a permanent employee, if is ideal, then zero is the cost. Then if it is a casual employee, then what is the wage to be paid? If it is a busy, then wage plus opportunity cost. Then machinery also we discussed it, regular use or ideal or not using regularly. If it is a regular use, difference in WDV or depreciation amount or replacement cost difference, there is ideal or absolute difference in NRV. Then we have discussed an overhead. Overhead is the incremental overhead we have to incur. Even fixed we learned avoidable or unavoidable. Avoidable is a relevant cost. Unavoidable is a that is avoidable means if you don't go with the project you can avoid. If you go with the project you cannot avoid. So that kind you have to consider. So that kind of things also we have discussed. So historical cost we won't consider. Sunk cost we won't consider because that are all irrelevant. So that type of question only. So please recall the relevant your session on relevant costing because it's a standard very good question, 14-mark question. So reading the question itself will take little more time. So be very ready. It's a little lengthy question. So we'll start. Rontex Limited has been offered a contract by XCL Limited to build it for 5 special guest house for use by top management. Each guest house will be an independent one. The contract will be for a period of 1 year and offer price is 1 crore. In addition, it will provide 2 grounds land free of cost for the purpose of construction. The chief accountant of Rolex has prepared an estimate which has given not accepted price offered. He estimate given below land. We require 3 ground at 20 lakh each. Drawing and design, registration, material, cement and sand, brick, steel, others, labor, skilled, unskilled, supervisor salary, or general depreciation. The accountant also provide the following information. Land. Total requirement of 3 ground costing 20 lakh. Exxon will provide 2 ground free of cost. So your incremental cost will be what is you require 3 acres. In that 2 you will get free. So out of pocket will come only for what? 1 acre. Drawing is same. These have already prepared and 50% of cost has already been incurred. Material. Cement and sand are already in stock and in regular use. If this used for this contract, they have to be replaced at a cost of what? 8 lakh. Bricks and tile represent purchase several months before different quantities have been sold in the market for a 5 lakh after meeting the further expense. Other material 2 lakh in Indian decoration in stock, which no alternate use expected. However, they can be sold in what? 1 lakh. Labor. Skilled worker will be transferred to this project from another project. The project manager said that the men were returned to him. It could have been given the company additional of what? 2 lakh profit. Supervisor undertake. Various customers said they pay continuity of employment will get affected the new contract. If the contract is taken, he will devote half of the time over it. The equipment that would be used for the contract was bought 1 year before for 30 lakh and is expected to last for 5 years. It is also used for what? Another contract. Current replacement is 32 lakh. 1 year time. It will be what? 25 lakh. The general overhead include both specific and absurd. If the contract is not undertaken, 4 lakh can be avoided. They have also, on the other hand, which would be not be executed the contract to be accepted. The estimated profit from the project is what? 10 lakh. We have to find out what is the relevant cost and what is the irrelevant cost and indicate the reason why you taken that accept or do not accept. So shall we start, friends? Are you ready? So you can start a very good question. So it discusses all the point of your relevant costing. So what was the relevant cost? Land 2 we are getting free of cost. So we'll buy only one. That is only relevant. So 1 ground into 20. See, drawing and design. What is your opinion, friends? Drawing and design. See the wording. They have already been prepared. So whether you go for the contract or do not go, already it is incurred. 50% has already been incurred. Cost also incurred. So here, drawing and design, you don't take any amount. Payment, we are not debt. But that we have to do. They are not telling it is a bad debt. Drawing and design already ready. So prepared already. So the amount will be what? 0. Why drawing and design 0? Already prepared, ready. So you don't want to make it again out of pocket. That no. These have been prepared, ready. These have been prepared. And 50% cost is incurred. Means you paid 50%. Balance 50% is due. It is not based on this contract. That means you brought some item. You brought a car for 20 lakh. You paid only 10 lakh. That means you brought already. So the cost is incurred. In your accounts, it is incurred. That is incurred. If they're telling that it is bad debt written off like that, then it is there. Or if it is given one more line that balance 50% has to pay if contract is continued. That is, we have to pay additionally. That kind of point is not there. So whether we go with assumption, that is why assumption also. Based on the assumption, slightly answer may change. We are going with the assumption that anyway we have to pay the balance 50%, there is no waiver. So it is not an incremental cost or a relevant cost. If the question tells that you don't want to pay the 50%, if you continue, then only you want to pay, then it is a relevant cost. Clear, friends? Yes. So we can make the assumption because we are making a silent. We can take 50% cost also. But the question is silent only. See, you have already incurred the cost. So if you incur the cost, balance you have to pay. No one is weighing the amount. So whether you go with this or do not go with, anyway you have to pay the balance. So it is not an incremental cost or a relevant cost. Correct? Next, material. See, in this order, if you've gone through, before the material, there is an item called registration 10. Registration, they are given silent. Silent means we have to incur. That is no speciality, we have to incur. Silence means they are nothing mentioned, so we have to incur. Now we will go for your main area, materials. Materials, we have cement and sand. What is cement and sand, friends? Cement and sand already in stock and regular use. So we have told that regular use, then we have to take what? Replacement cost, not even material purchase. So you should not take 6, you have to take the 8. Regular use, we have learned that you do replacement cost, not the historical cost. Next, bricks. Bricks is purchased several months before. They could have been sold, so no other use. So NRV, net realizable value. What is the bricks NRV? 5. No bricks you purchased for, but you can sell now for 5. Steel. So hope you are now recall your regular class sessions. Others. See, still they are silent. Still they are silent. We have to assume that we have to buy new. You have to buy new, nothing in the stock. So you have to add the steel. What is the steel amount? 10 lakh. Others, including interiors. So what they tells in others? Others material worth rupees 2 lakh to interior are in stock which is no alternative expected. However, they can be sold for what? 1 lakhs. So others, interior 1 lakh. Now others, balance, they are silent. Others total amount what they mentioned, others total amount they mentioned 10 lakh. In that 2 lakh India is gone. Balance is what? 8 lakh. So others total amount is 10 lakh. But we won't consider only 9 lakh. The reason is what? 2 lakh you already incurred, so 1 lakh only the worth value. So you take 1 lakh. So the balance amount they won't mention. They won't mention means we have to buy new. It is not in the stock. If it is in the stock only, then the relevant cost in. Otherwise, you have to buy it the replacement cost. So, my dear friends, I have given that much clue. Please complete by yourself balance. You have to proceed the next items. Come on, friends. You can able to proceed it. Same perspective you can approach. Come on, friends. I'll give you very fast. Okay. So hope all of you are able to recall. So now, if you go proceed further, skilled labor will be transferred this project. So it's a permanent employee. So already they are injured. If they injure, additional amount of 2 lakh. So opportunity cost. So we have opportunity cost. That is contribution foregone to unskilled labor. Skilled labor, if you go through, we have here 12, but we won't take the 12 lakh because they are a permanent employee. We have told already the clue in the beginning of the session that is permanent employee. We will take only opportunity cost or a profit foregone. Salary we won't take it. We have discussed the reason also salary we won't take it. Whether we get the project or do not get the project, anyway you have to pay the salary. Whether you get the project or do not get the project, anyway you have to pay the salary. That is the reason you won't take this. Now coming into unskilled, unskilled they what they tell, unskilled they are telling silent. Unskilled if they are telling not silent, silent we tell that there is no unskilled labors we have, so it is a casual. Nothing tells about opportunity foregone, so we can take unskilled fully. So unskilled labors. Unskilled labor. So you have to take 8. Now moving further, what about the supervisor? It is coming. Supervisor salary, it's 5. So supervisor salary, undertake various tasks in the site, has to pay and continuity of the employee will not affected by the new contract. If the contract is taken, he will devote half of the time. Again, unskilled labor, they are silent. Unskilled labor, since they are silent, we will take what full amount because we have to incur. So please continue, friends. Hope all of you completed. Now, what about supervisor? Supervisor undertake various tasks in the site to pay and continuity of employment will not affected by the new contract. That is supervisor also the same skilled employee concept. Supervisor also same skilled employee concept because he is permanent. He is permanent. So permanent now no wage. Supervisor there is no whether it is half time or full time. Anyway supervisor is you are paying salary. So no incremental cost. So supervisor will be 0. Supervisor will be 0. Next, equipment is used for a contract 30 lakh and expect to be 5 years. So 5 years now 30 by 5 years in a year 6 lakh. It can be used for another contract. So this is current replacement will be. So this is not relevant. If regularly used, then depreciation only will come. So they are taken the depreciation very clear. So we can take the depreciation directly. Because regular use we take depreciation only. One second. What is the annual depreciation? Annual depreciation 30 lakh for 5. See, the current replacement is 32 lakh and in a near year time it is 25 lakh. So 6 lakh in 25 lakh 7 lakh. So you can take the depreciation 7 lakh but 6 lakh. So you can take the depreciation amount because either of the one only will take. If it is a regularly used, you will take difference in WDV. If it is absolute, you will take what? NRV. So NRV don't want to consider here. They are given both here. This 32 minus 25 is NRV purpose. This is for depreciation. So the question is not telling that it is cannot be used. It is a newly one year only brought. So this can be considered as what? No. It is how based upon the use. That is, if regularly used, then you take difference in WDV or replacement cost. If it is obsolete, then you take difference in NR. Then there is nothing called a difference in that. Now going further, yes, general overhead, you can be avoided. So you have to take that. General overhead, it is to be incurred. You can be avoided. If this contract is because in the overhead, in the regular class chart you refer overhead, fixed overhead, you might have been avoidable, unavoidable. Avoidable that we have to consider what is the cost incurred. Unavoidable that we should not consider. So it is there in our regular class itself. Then profit from this contract, that is also relevant. So what is the profit from the contract? 10. So this is the total relevant cost. 92. Total relevant cost is what? 92. So this is how you have to get it. Your ICMA material is taken depreciation 7. Then you will get 93. So you can go for this perspective also. That is the assumption only. Because the question is silent on depreciation. What is depreciation? What is the point? Tell that the equipment would be used for a contract 1 year before 30 lakh and expect to be last for 5 years. This can be used for other contract 32 lakh 25. So that means WDV or NRE, which is the method they are not mentioned. How we discuss in our regular class, if regularly used WDV, if it is absolute, you take NRV. But here we can go with a 6 or 7, as I have said. We can go for highest that perspective also. We can go. Then we will get exactly what 93. Then we will get exactly what 93. So this is your relevant cost. So congrats for those who got the correct answer. This is the unsolved question you have suggested answer. Suggested answer also they are not solved. So this is the question we are solving for you to make you get clarity of this concept very well. Now they are asking irrelevant cost. Irrelevant cost is just ulta. What role you taken 00? That is what irrelevant cost. Supervisor salary is irrelevant cost. Then your another point what you have taken. I think supervisor skilled labor 10 rupees irrelevant cost. Then what is next, friends? It's 50 percentage you have already paid. So that is also irrelevant cost. So this way also you can able to find out irrelevant cost because they are asking what is the relevant cost and irrelevant cost. So we have done the answer. So you can take your own time and complete it. Now we can go for MQP. So this is the MQP set to 2, which is a data of our class workbook question. So this is page for 14 marks for your MQP set to 2, which is released for June 2025. So this is same ditto question of the workbook question. So pricing decision, this is the question. So we are going to practice this question. Already our class workbook, this is the page number 13 question. So we can able to go question number 3. So shall we? So we can practice this question.
Already. A manufacturing company currently operating at 80% capacity. So like our last question only. Last question they have given in units. Here they have mentioned in capacity. That is the only difference. Export order from Middle East, which will utilize 40% of the capacity. The order has to be taken either in full and executed 10% below the current domestic price or reject totally. What is the meaning that if you are taking out to fulfill the entire 40% requirement, you cannot take a part order. You cannot take a part order. The current sales details is given below. Sales amount is 16 lakh. Material, labor, variable overhead, fixed, everything is given. So you don't want to worry about our formula. S is equal to variable cost plus fixed cost plus profit. The following alternative are available. First one, continue with the domestic sales and reject the export. That is, go with 80%. Go with 80%. Now point number 2, accept the export order and allow the domestic market to starve to the extent of excess demand. Tell my dears, what is the meaning of this? That is, you know your total capacity is 100. You know your total capacity is what? 100. So if you are accepting the export, 40 is gone. Because you cannot accept export below 40. So your balance is what? 60. But domestic your requirement is what? 80. So they are telling that since you are accepting the export, start reduce to from 80 to 60. So your option 2 is what? Domestic 60, export 40. First case only domestic, which is 80. The last point number 3, increase the capacity so as to accept the export order and maintain the domestic demand by A, purchasing additional plant and increasing 10% capacity, thereby increase the fixed cost by 65. See, you want to increase your capacity. So right now 80. The export is what? 40. So 80 plus 40, it will come what? 120. So you need to increase your capacity by what percentage? Perfect. You need to increase by what? 20%. Since you need to increase by 20%. Since you need to increase by 20%. In that first 10%. In that first 10%, you can increase by additional capacity, which will incur a cost of what? 65. Still, what is the balance spending? Very good. That is, you need to get 120, another 10 only reaches. So balance is what? 10%. That is the B part. You have to work overtime. You have to work overtime at 1.5 times of that to meet the balance. That means overtime you have to make the payment of what? 1.5 times. That means you need to pay extra wage. You need to pay extra wage. You have to require which alternative is best. You have to tell which alternative is best. So let's see how many of your answers are correct. Statement showing evaluation of best alternative. So what are all the choice, my dear friends? First one, continue domestic. Continue domestic. That means you go with 80%. Next, star domestic, that is reduce your domestic. That will come 60 plus 40, which will be what? 100%. Yes or no? Then next, finally, increase the capacity. So it will be 80 plus 40, 120%. So as I said, we can do it very fast. It's just a matter of seconds only. First one, sales. Continue domestic is very easy. Everything is given in the question. Your sales amount is what? 60 lakh. you have to less variable cost, direct material. What is your direct material? 5,80,000. See, unlike our last question, there is no increase in cost. Unlike our last question, there is no increase in cost. Next is direct labor. Next is direct labor, which is 2,40,000. Next, variable overhead. What is the amount of variable overhead? Which is 60,000. So you get all the variable cost. You can reduce to, you can find out your contribution. What is your contribution? 1 minus 2, which is 16 lakh minus 8 lakh 80. Now you can reduce your fixed cost, which is mentioned in the question, 5 lakh 20. So here no changes, existing only. So there won't be no difference. Your profit will be 2 lakh. Your profit will be what? 2 lakh. Now we are going for second option. You are reducing the domestic. So my dear friends, if you are reducing the domestic, your domestic sales 60 lakh is at 480. So if you are reducing into 60, it will become what? 12 lakh. It will become what? 12 lakh. Then export, as we know, are we giving the same price or lesser price? We are giving at a 10% lesser price. So this 12 lakh will be there. This 12 lakh is for what? Domestic. That is belongs to 60. Now you have 40. How to find out for 40? Very easy. That is 16 lakh is for 80 now. What will be the 40? But the point is what? Export, very good. Export you are giving at what? 10% below the price. So you will get only what? 90%. So 60 lakh is for 80. And what will be for 40? In that you will get the price only what? 90%. So the sales will come what? 90 lakh 20,000. But when it comes here, that problem is not there. You will get the same 60 lakh, that is 80. Then for 40, that balance amount will come, which is, if I am not wrong, 7 lakh 20. So you get total is what? 23 lakh 20,000. So this is how the sales. If you want, you can copy the breakup. So it's very easy. That's what I have not given the breakup. So breakup is nothing but here for 40, how we did? That is 60 lakh is for 80 lakh. What will be the 40 into 90%? This is we have did for export. This we did for export. Balance 60 is very easy. Now we have to find out what? Material. Material, we know it is a variable in nature. It will change according to the level of production. So what will happen? 5 lakh 80 is for 1 lakh 60 lakh. What will be for? 5 lakh 60 is for 80 lakh. What will be for? 100. 5 lakh 80 is for 80 lakh. What will be for? 100. Similarly here, 7 lakh 25 is for 100. What will be for? 120. Because your capacity changes, it will change. Now coming into labor, same way is for 80 lakh. What will be the? 100. Variable overhead also same way, 80 into 100. Here 100 into 120. Now the main part. Are you ready, my dear friends? We are going to discuss the effect of overtime. We are going to discuss the effect of overtime. So here nothing else. 8 lakh 20 is your contribution. No change in fixed cost. So fixed cost will be same as 5 lakh 20. Your profit will be what? 3 lakh. Now the last option. I know here some friends will have some doubt or some mistake will be there. First we will correct it. Are you ready? So the first 2 points they are telling that in order to meet the capacity requirement, you are buying an additional plant which will incur additional fixed cost of what? 65,000. 1000. That means your 5 lakh 20 will increase by what? 65. Your 5 lakh 20 will increase by what? 65. So which will be what? 5 lakh 85. Now the last line. This is the testing line, labor. That is, you have to work overtime to require the balance. We have discussed what is the balance. We need 120, 100 normally, 10% by machine. So balance is only what? 10%. Balance is only what? 10%. That 10% we are working with what? Overtime. What? How much you are paying? 1.5 times. So just listen. This is the last point. That is what I don't fill this column. If I fill this column, answer also okay. With your permission, I am doing for that also. See, very easy. You are finding out the labor. Yes or no? First we can do direct labor up to 110. Direct labor up to 110. Direct labor up to 110 will be nothing but, see, 2 lakh 40 is for 80 lakh. What will be for 110? Now, direct labor for balance 10% with overtime. With overtime. So 2 lakh 40 is for 80 now. What will be for 110? This is what? This is the main point for balance 10% with overtime. So how it will be now? 2 lakh 40 is for 80 lakh. You want to get for 10%. This 10% you have to pay what? Overtime, which is 1.5. You can do different way. I am doing one of the simple method. So 2 lakh 40 is for 80 lakh. What will be for 10 into 1.5 times. So your total will come. This is up to that. So total will be 3 lakh 75. So again you will get a fancy number. See, again you are going to get a fancy number. Your contribution is 9 lakh 85. So you can check it. Your profit is getting a fancy number. 2 lakh, 3 lakh, 4 lakh. So you can go with the ranking. What will be the ranking, my dears? Your ranking, higher the profit, better the option. So 1, 2 and 3. So hope all of you are clear. If anyone of you having doubt, take your own time and copy, my dear friends. Please. Now, we will move to the next question. So we need to give comments. Final level, we need to give comments. So you have to give the comments that we will go with the export, increase the capacity by 20%. Comments are very important. Apart from ranking, you need to give comments. If it is an essay question, they will give 7 plus 1. Is 7 plus 1, or sometimes 6 plus 2, or 8 plus 2. 2 mark will be there for comments. Because ultimately this chapter name also is what? Decision making. So you have to take a decision, not only that preparation of a tablet. I want you how to practice 11th question. Very tricky while drawing. I think some of the friends make mistake also while making your network. It is little advanced question. I want you how to complete first 2 part alone. Balance we will discuss together. I want you how to complete first 2 part alone. Take your own time and copy, my dears. Yes. So as I discussed, very interesting to draw. Let's see how many of you drawn correctly. So before that, we will just go with our variance and other details. Sir, this question is not asking variance. Shall we do? Yes, you have to find out variance because we have to do further step. Which are all the activity, my dear friends? Can you help me? Which are all the activities? 1 to 2, 2 to 3, 3 to 5, 3 to 5, 7 to 8, 7 to 8, 5 to 8, 5 to 8, 6 to 7, 6 to 7, 4 to 5, 4 to 5,
1 to 6,
1 to 6.
2 to 4.
Now, my dear friends, if you analyze this question, they have made one big confusion to you. That means numbers, they are given different order. They are not given proper order because 1 to 2 is here, then 1 to 6 there, 2 to 3 is there, then you have 2 to 4. That means they are testing you in different way. So that you should be take care first. Then for 4 it will went to 5, 3 to 5 also it is there. So let's start. First you have to find out your time expected. Tell my dear friends what is the time expected. First one I will help you. 3 plus 6 into 4 plus 15 by 6. You'll get 7. What is the next time?
14,
14,
11,
11,
18,
18,
4,
4,
11,
11,
7,
7.
6, 5.
So hope all of you got the correct. Now you have to do variance. How you have to do variance? That is 15 minus 3. You have to divide by 6. This you have to multiply with again the same number. 15 minus 3 by 6. You will get a number of what? 4. What is next?
16,
16,
4,
4,
16,
16,
1,
1,
16,
16,
4,
4,
4,
4.
1.
Now we can go with our network. A very interesting network. Let's see how many of you are correct. So first you have 1 to 2. Now we have 2 to 3. We have 3 to 5, 2 to 4 also there. We have 3 to 5. We have 4 to 5. We have 5 to 8. We have 1 to 6. Six to 7. We have 5 to 8. We have 5 to 8. 6 to 7. 7 to 8. So we have taken all the number 3 to 5, 7 to 8, 5 to 8, 6 to 7, 4 to 5, then 1 to 6 and 2 to 4. All the number we have taken. Congrats for those who got the correct answer. You don't need to be the same drawing like this, but you should have a proper way. That is, you have to follow the principle. Now you can give the days, my dear friends. 1 to 2 we have 7 days. Next 2 to 3 we have how many days? 14 days. Next 3 to 5 you have 11 days. Next 5 to 8 4 days. Next 2 to 4 5, 4 to 5 7, 1 to 6 you have 6, 6 to 7 you have 11. Now this number is over. Now what is the next part they are asking? Network diagram we did. You have to find critical path after estimating earliest and latent event time for all the nodes. That means how you have to do? You have to find out E value and S. Very interesting.
Very good. How we have to do, my dear friends? We did very good number of questions. Let's see how to start. We have to start with E value as 0. Now we have to add all the duration. First we have 7 days. 0 plus 7, you will get 7 days. 7 plus 5, you will get 12 days. Now, next to 12 plus 7, 19, you should not give. You have to wait. Because it's a merging node. Whenever come merging node, we have to take the highest. So what you have to do? 7 plus 14, you will get what? 21. 21 plus 11, you will get 32. Now you will get two number, my dear friends. 21 plus 11, you will get 32. 12 plus 7, you will get 19. Which is the highest? 32 is the highest. You have to put the 32. Now you have to stop and you have to come this way. 0 plus 6, 6. 6 plus 11, 18. Now again merging node. Again merging. There are two merging. So here 18 plus 18, 36. Now 6 plus 11, you will get 17 only. 6 plus 11, you will get 17 only. 17 plus 18, 35. 32 plus 4, you will get 36. What you will take? You will give 36. So you can give 36 here. Now this will be the same. Now what you have to do, when you are finding out L value, we have to reduce back. That is, we have to come back. Here, bursting point is the problem. So we'll start one by one by one. Here 36 minus 18, you will get 18. Here 36 minus 4, you will get 32. Now here come the point. 32 minus 7. What is the 32 minus 7, my dear friends? There is no problem. 32 minus 7 is what? 25. Not a problem. Because now 32 minus 11, you will get what? 21. Now here come the bursting point. This is the bursting point. 25 minus 5, you will get what? 25 minus 5, you will get what? 20. 21 minus 14, you will get what? 7. You have to take the lowest. You have to take the lowest. So 25 minus 5, 20. 21 minus 14, 7. You have to take the 7. Now here you get 18. 18 minus 11, you will get 7. 7 minus 6. Now very interesting. 7 minus 6, you will get 1. But whereas 7 minus 7, you will get what? 0. So this E value, L value is over. They are asking, by doing this, you have to find out what? Critical path. You have to, we know, critical path where E value, L value is what? Same. So where this E value, L value same, this is where your E value, L value same. So you can write your critical path. 1 to 2, 2 to 3, 3 to 5, 5 to 8. And the duration will be what? 36 days. Congrats for those who got the correct answer. Now we'll proceed to the remaining part. Now, it is not 36 days, it is expressed in weeks. So, 36 weeks. Now, my dear friends, we have taken these 7 days. Is it the exact 7 days or we are taking a weighted average day weeks? Weighted average only. It is not exactly 7 days. It may change. Yes or no? Yes or no? That means, though we are getting the project duration as 36, if everything happened very fast, this may complete before 36 week also. Yes or no? You can't hear. No. Second part, suppose if everything went lag, because you taken a weighted average time only, if everything went lag, this may take more than 36 week also. Yes or no? Yes. Yes or no? Yes. So now what we are going to discuss is, by using the concept of statistical techniques, we are going to identify the chance of completing before 36 weeks, chance of completing beyond 36 weeks, all the different situation. I know all of you are ready. So how we will start? First, we have to start with reading the question. First, we will read the question. What is the question, my dear friends? Find the probability of completing the project before 31 days. They are asking what? Find the probability of completing before 31 days. So let's start. So they are asking the question. Step by step, we'll start. Find the probability of completing before 31 days. See, we have discussed that if you want to solve this, we have to use a concept called statistical techniques. So what the formula is, statistical formula, Z is equal to TS minus TE divided by standard deviation expected. This is the formula we have to apply. What is TS? TS means what is the time you are scheduled. What is time you scheduled or you want to plan. What is the time expected means your project duration. What is the standard deviation? This is standard deviation of critical path. This is standard deviation of what? Critical path. So we will find out one by one. What is a time scheduled, my dear friends? They said, what is the probability of completing before 31 days? That means 31 weeks. Your time scheduled is what? 31 weeks. Next is TE, project duration. T is what? Project duration. That we have just find out. What is your project duration, my dear friends? 36 weeks. That we have just find out. That is 36 weeks. Now you have to get standard deviation expected. That is standard deviation of what? Critical path. We have found out so far variance. How can you get the standard deviation from variance? You have to just take a square. So the answer will be standard deviation expected will be square root of standard deviation of which one? Critical path. Which is all your critical path? 1 to 2, 2 to 3, 3 to 5 and 5 to 8. So go to your question. 1 to 2, what is the variance? 4. Next critical path is 2 to 3. What is the critical path? 16. Next is 3 to 5. 4. 5 to 8. 5 to 8. 5 to 8 is 1. So your variance is 4 plus 16 plus 4 plus 1. So what you have to do? 4 plus square root of 1 second. Standard deviation expected will be square root of, tell me the number, what is the number? 4 plus 16 plus 4 plus 1. You get square root of 25, where you will get the number of what? 5. Your standard deviation expected will be what? 5. So your Z will be TS is 31, TE 36 divided by 5. Your Z will be minus 5 by 5. Your Z will be minus 1. Sir, what is the meaning? Z value is a statistical value which will be given in the question. Here I have mentioned for your exam, it will be given in the question itself. Z minus 1, what is the value? 0.1587. What is the value? Z minus 1, 0.1587. That means 15.87%. Your answer is over. So what is the answer? Right now you are expecting 36 weeks. Listen, my dear friends. Right now, as per the critical path, you are expecting is what? 36 weeks. But this 36 you are taken as a probability only, that may change or may not change, because we taken average, weighted average only. There are pessimistic, most likely everything is there. That means if everything went favor, the probability of completing, the chance of completing within 31 days is what? 15.87%. 15.87%. Now, my dear friends, if they are asking probability of completing, not before, if after, now what we have to do? The formula is only for before. So if before is 15.87, after will be what? Balance. Total of the probability will be what? 1. So 1 minus 0.1587, that is 0.9413, that is 94.13 percentage is the probability of completing 84. Yes, what is the probability of completing after 31 days? But that is not asking there. They are asking which question? Probability of completing exceeding 46 days. So you don't have no formula for exceeding. Do for completing 46. Balance will be what? Exceeding. Can you please try? You can post the video and copy the answer. Then we will go with the last part of the answer. Please try to the last part also. Yes. So what is the next answer, my dear friends? Next will be, they are asking exceeding 46 days. So if it is exceeding 46 days, same formula, 46 minus 36 by 5, you will get 2. The value of Z2, also I have given here, value of Z2, 0.9772. They are asking exceeding 46. So what is the probability of exceeding 46 days, my dear friends? 1 minus 0.9772. What will be the answer?
0228.
0228. That means 2.28%. Hope all of you are clear. Now the last part, what will be the effect on current critical path if most likely time of 3 to 5 get revised to 14 instead of 11. So the 3 to 5 is getting changed. So what will happen? We have to proceed to 3 to 5. What is current 3 to 5? How we are finding out? Current 3 to 5 we are finding out by 5 plus 11 into 4 plus 17 divided by 6. What is the time of 3 to 5, my dear friends? What is the 3 to 5 time? This is the current time. Now they are telling that the most likely time is changed to 14. Right now it is 11. This is changed to what? 14. So what is the revised 3 to 5, my dear friends? 5 plus 14 into, they said that 3 to 5 revised to, they said most likely time, 14 into 4 plus 17 by 6. What you will get? So what is this number? 11. This is 11 only. This is 13. That means days increase by what? 2 days. If days increase by 2 days, this 3 to 5 is coming under your critical path. Since 3 to 5 is coming under your critical path, it's very easy for you. This 36 will become what? This 36 will become 38 weeks. Suppose if the 3 to 5 not in critical path means, then you have to do again critical path. You have to find out the new critical path. Since this 3 to 5 is coming under critical path, then it will not have no other impact. So you can just increase 2 weeks here. How is the 2 weeks? That is 11 become what? 13. So this 3 to 5 instead of 11 will become 13. 36 will become 38. So your comment you have to give that what will be the effect on critical path? The effect is critical path will increase by 2 weeks. Critical path will increase by 2 weeks. Hope all of you are clear. Take your own time, and table below provides you the cost and time between. So they have given normal time, crash time, normal cost, crash cost, everything. They are first asking, draw the project network, determine the critical path, normal duration and normal cost. Then they are asking, crash the activities of the project time reduced to 9 weeks. Here everything in week with minimum additional cost. Here there is nothing given indirect cost or optimum. When the word optimum is there, you will compare with indirect cost. Here it is nothing called indirect cost and all. You have to reduce up to 9 days. What is the minimum cost? I know you are ready. I am also ready. Let's start. First, what we have to prepare? First, you have to draw the network. So please complete the network, my dear friends. I will help you to prepare cost law. So we are going to discuss question number 14. First, we will go forward cost law. Which are all the activity, my dear friends? Activity. I know you are already completed. You can post the video and try, my dear friends, because in the last session you did lot of questions. So you have to try yourself now. So 1 to 2, 1 to 3, 2 to 4, 2 to 4, 3 to 4, 3 to 5. This is a previous year question. 4 to 6, then 5 to 6. See, for time saving purpose, I am going directly with the cost slope. How can you go directly with the cost slope? Change in cost by change in activities. See, the cost is expressed in change in days in thousands. We'll go in 1000 itself. 15 minus 10, you'll get 5. 2 weeks minus 1 week, you'll get 1 week. So you'll get 5 by 1, 5. Next, you will get what? 21 minus 15 divided by 8 minus 5, you will get 2. What is next? 24 minus 20 by, you will get 4 minus 3, you will get 4. Next, you cannot crash, not applicable. Why you cannot crash? Normal days and crash days both are same. Next, 15 minus 8 divided by 2 minus 1, 7. Next, 6 by 2, 3. Then finally, 36 minus 12 divided by 6 minus 2, you will get what? 6. So you go to your cost slope, everything, my dear friends. Now we can go directly with the drawings. I know you are ready. I am also ready. So first we will go with 1 to 2, 1 to 3. So 1 to 2, 1 to 3, then 2 to 4, 3 to 4, 2 to 4, 3 to 4, 3 to 5, 4 to 6, 4 to 6, 3 to 5, 5 to 6. What you have to do? You have to give the days. 1 to 2, your normal days is 2, crash days is 1. 1 to 3, normal days is 8, crash days is what? 5. Next is 2 to 4, 4 and 3. 4 and 3. 3 to 4, 1, 1 only. So you have to make, because you cannot crash. Now, 3 to 5, 2 and 1. 4 to 6, 5 and 3. Then finally 5 to 6, 6 and 2. So what you have to do first, my dear friends? First, you have to identify your critical path. How to go with critical path, my dear friends? See how fast we are doing. That is, once you did the question, then it will be easy, my dear friends. Just 5 minutes, we reached up to this. How to start, my dear friends? First you have to go for starting to end all the route. Which are all the route we have? 1 to 2, 2 to 4, 4 to 6. How many days? 2 plus 4, 6. 6 plus 5, we will get what? 11. It is in weeks, so make it 11 weeks. Next option, 1 to 3, 3 to 4, 4 to 6. So 8 plus 1, 9, 9 plus 5, you will get what? 14 weeks. Next, how we will proceed? 1 to 3, 3 to 5, 5 to 6. So you will get 8 plus 10, 10 plus 6, you will get what? 16 weeks. You go to your entire data. Now we have to go for what? Crashing. What is the objective of crashing? Your objective of the crashing is you want to make into 9 weeks. What is right now? 11 weeks. So from what is right now critical path? 16 week. From 16 week, you want to bring to what? 9 week. A previous year CA final question, a very good question. You will able to get the concept very well with this question, my dear friends. As of now, there is only one critical path. That is the last one. If you want, I will highlight the same. 1 to 3, 3 to 5 and 5 to 6. With your permission, we will go with what? Critical activities. So we'll go with critical activities. How the critical activities? How the critical activities, my dear friends? 1, 2, 3 first. Let's see. One, 2, 3, 3 to 5, 5 to 6. Activity. What is the cost slope? 1 to 3, what is the cost slope, my dear friends? 1 to 3, the cost slope is 2 or 2000. 3 to 5, what is the cost slope? 7,000. 5 to 6, what is the cost slope? 6. Which is the lower the cost, my dear friends? So what is the comment? Since 1 to 3 is lower cost, 1 to 3, how many days you can crash? 1 to 3, you can crash up to 4 days, but the problem is what? The problem is from 8 you can crash up to 4 days. No, 8 to up to 5 days. Up to 5 days. 8 and 5. You can crash up to 3 days. So you have to check 1 to 3 is a common with yes. See, you can see 1 to 3 is common with the next number. 1 to 3 is a common with the next number. So what you can go, since 1 to 3 is the lower cost, we can crash up to 3 days. Why 3 days? We have discussed. The question itself is telling 1 to 3 from 8 we can go up to what? 5 days. See, if you reduce by 3 days, 16 will become 13. Then you have a doubt, sir, this 14. Actually, this 14 also 1 to 3 is there. So the impact will apply in both the case. So what is the cost for, since 1 to 3 is lower the cost, crash up to 3 days. So what is the cost of crash? Cost of crash will be 1 to 3 is 2000. So 2 into 3, or you can make 2000 into 3. It will be what? 6000. What will be the revised critical path now? Now your revised critical path will be, your critical path will change. What will be the revised critical path? Wherever come 1 to 3, that will change. First row no impact, but the next row there is a change. Next row, what happened? 1 to 3, 3 to 4, 4 to 6. Earlier it was 14 days, 14 weeks. Now you reduce by 3. It will become what? 11 weeks. Next, what will happen? You have to go with the same thing. 1 to 3, 3 to 5, 5 to 6. It will become what? 16 become what? 3 days. It will become 16 will become 13 weeks. This is all. I have already told, for better understanding, we discuss this is from CF final. So we have the sets, every adjustment will be there. Now you are the revised critical path. Now your revised critical path is changing or remain same? Revised critical path, the same critical activity only. So you can do shortcut. This is dead. Which is the next lowest number, my dear friends? If 1, 2, 3 is over, your critical path will be remain same. That is 1 to 3, 3 to 5, 5 to 6. So 1 to 3 is dead day. Now remaining these two, which is the activity you go? Lower the cost is 5 to 6. 5 to 6, how many days you can crash, my dear friends? 5 to 6, you can crash by 4 days. But the problem is what? 5 to 6 is not common in previous two number. So what you can do, your difference with the previous critical activity is what? 14. Though you can crash up to 4 days, but you have to stop by what? 2 days. Because if you do further 4, the effort will not come for the remaining. No waste of money. So what you will do, since though crash can be done up to 4 days, but crash only up to 2 days as next critical activity difference is only 2 days. The next critical activity difference is only 2. So you have to do subject to that only. So 2 days. So what is the cost of crash, my dear friends? Your cost of crash, 6,000 into 2. It will be what? 12,000. Now what will be the revised critical path? Your revised critical path will be, here come the sets. I know you're all waiting from the last session onwards for the sets only. So what will be the effect? Wherever crash only by 2 days, which activity? That is crash 5 to 6. So I know you're all waiting for what? That only. So let's start the game, my dear friends. This is same. This is same. Here it will change. What will happen? 1 to 3, 3 to 5, 5 to 6. This become now what? This become what now? 11 weeks. Now let us make it. Already your 1 to 3 is dead. So you can make that 1 to 3 dead symbol already. Now here we are coming to the last stage. We are going to end, my dear friends, right now. I know you are all ready. Now all the activity now become what? 11 weeks. Now if you want to crash, your objective is 11 or 9? 9 only. So you cannot stop now. You have to further crash. So now if you want to further crash, you want to reduce all the 3 activity. First activity you want to reduce. Second activity you want to reduce. Third activity also you want to reduce. I have taken one dead mark for which activity? 1 to 3. Why 1 to 3 I have put a dead mark? Because 1 to 3 you can do 8 and 5, that already fulfilled. 3 to 4 also already dead activity. Why 3 to 4 already dead activity? Can you tell me? Because 3 to 4, if you see, you cannot run the crashing. So now this is the option you have. From this option, you have to complete, my dear friends.
5 to 6, sir.
Yes. 5 to 6 now not fully finished. 5 to 6 you can go up to 2 days. Out of 4 you have crashed only 2 days. Still 2 days life is there. So you cannot put the symbol right now. It is there. Now we will go with the sets last idea so that you will get the concept of set very well. Before that, hope all of you complete up to this. Please, my dear friends. Now we'll go of the most awaited concept, that set. So we'll go for sets. So you have to take from each option. We have to take option A, option B and all. Let's see how many options we can prepare. We'll be able to go with. Let's start. See, the first point is what? You have to see any common is there. See, if you see in this area, 1 to 2 is not common, but 4 to 6 is a common. So if common is there, you have to go with common first. So top you will take 4 to 6. 1 second. I'll just make the corrections. See, top you will take what? 4 to 6. So if you top, you have to take, we know common only you have to take. So here also you will take what? 4 to 6. Now third row, you don't have no common. So you don't have, if you have 4 to 6, you have to take 4 to 6 only, but no other way. So you have to take what? 3 to 5. Why 3 to 5? 1, 2, 3 already dead. 1, 2, 3 already dead. Now going for B, top you take 4 to 6, again 4 to 6. Down what will take? You will go with 5 to 6 because 3 to 5 already we have taken. Now next option is what? 5 to 6. Now I know some of you might have been trying this option 1 to 2 from top. If you take 1 to 2 from top, down you have to take which number, my dear friends? 1 to 2 if you taken from the top, down you have to take which one? Only one item is leaving, that is 4 to 6. We have learned that common item you cannot do like this. Common you have to take common only. So you cannot take a option with 1 to 2 because in the second you have to reduce in all the number. 4 to 6 you have only one option. So you have only two options as of now. You cannot go further sets. If you go further sets, the impact will be more than one. That is unnecessarily cost. So you have the option is what? Top 4 to 6. 4 to 6, 3 to 5, 4 to 6, 4 to 6, 5 to 6. Why 1 to 2 we are not taking? Because 1 to 2 if you take, you have option only what? 4 to 6, which is a common. Common you should not take because 4 to 6 is common here, 4 to 6 common here also. That impact will be, if you want you can do that, but that is a negative cost. If you want you can take it, nothing wrong in that. That is also an option only, but the effect will be more cost will come. The effect will be more cost. If you want, you can take that option also. That is also correct only. If you want, you can take that option also. But generally, the cost will be more. My dear friends, I am repeating once again. If you want, you can take, but the cost will be more. The reason I will tell you, top you take 1 to 2. Here you can take 4 to 6. Here you can take 3 to 5. Again, top you can take 1 to 2. Here you can take 4 to 6. Here you can take 5 to 6. This option is there, you can take. But the problem is what, you know, my dear friends. Here 4 to 6, 5 to 6 is option is there. Here additionally extra cost is there. So if you want, you can do C and D option, but the cost will be more. That is because the effect, the reason is what? This 4 to 6 also coming in C. The effort will be 2 deduction will be there. The cost will be more than previous one. That is why don't want to try for what? Common. If you want to take this, you take it. But final answer will remain same. You will take either of the A or B only because C and D the cost will be more. You can counter check it, my dear friends. So what is the cost for 4 to 6 and 3 to 5? 4 to 6 the cost is, what is the cost for 4 to 6? 3 plus 3. So 3 plus 3 you will get what? Yes, only one only you will take. 3 to 5 what is the cost? 3 to 5 the cost is 7. Then you have 4 to 6 only one time only you have to take common cost now. So 7 plus 3, that is why we are not repeating. So 7 plus 3, 3 plus 7, you have to take what? 10. That is why that option will not have more. Here will come what? Here you have 3 plus 6, you will get what? 9. See, why I am not telling this option you don't want to do. You can do this option, but cost will be more than that. You can check. 1 to 2, what is the cost, my dear friends? 5. 4 to 6, you will have 3. then 3 to 5 you will have 7. The cost is go somewhere around 15. The reason is what? You are incurring one more cost for 4 to 6. That is why this option not feasible. Now this 10 and 9. Let me ask you one shortcut if it's possible or not. I will tell you. I will check in. 4 to 6, how many days you can reduce? 4 to 6, how many days you can reduce? Super. 3 to 5, how many days you can reduce?
1 day.
We have selected 5 to 6 only. 5 to 6, how many days you can reduce? Super. This we are going to select 10 or 9. Which one you are going to select? 10 or 9. Which one you are going to select? 9 only. Super. This 9 you can reduce 4 to 6 2 days. 5 to 6 also 2 days. So your selection will be what? Crash 4 to 6 and 5 to 6 by 2 days. If you crash that by 2 days, the cost will be 9,000 into 2, 18,000. What will be the result, my dear friends? The result will be very simple. Your revised critical path will be, I will draw for you, my dear friends. I will draw for you. What will be the revised critical path? Your revised critical path will be already 1, 3, these are all dead. Now, this 11 will become 9 weeks. This also 9, this also 9. What is your target, my dear friends? Your target is what? 9 only. So you have achieved. If you do this activity, you are crashing by 2, not 2 days, 2 weeks. You are crashing by 2 weeks. So your target is achieved. Your target is achieved. So what is the minimum cost for that? What is the minimum cost? The minimum cost, can you tell each step what is the cost? What is the minimum cost, my dear friends? Can you tell me what is the minimum cost? First step, what is the crashing cost you incur? What is the crashing cost? First step, 6,000. Next step, 12,000. Next step, 18,000. What is the grand total, my dear friends? 36,000. That's all. Answer is over. Answer is over. So this is a very advanced sum which I took from CA final just for practice. The only point is what, my dear friends. Suppose if this 4 to 6 only 1 day, 5 to 6 only 1 day, you can crash only by 1 week only. Then you have to do again the same step. Now if you crash by 1 week, again same choice will come, same number will come. That is why we then shortcut directly by 2 weeks. If you directly by 2 weeks, our target 9 week is achieved. You can end up the game. So actually what is the final effect, my dear friends? Now you crash 4 to 6. 4 to 6 also now dead. Now you cannot crash further. Your 4 to 6 also dead. You cannot crash further. 5 to 6 also dead or not? Yes. Now you can not crash because the second critical activity 1 to 3 dead, 3 to 4 dead, 4 to 6 also dead. That means this is the cost you have to incur, minimum cost. Even you cannot further cost also. So hope all of you are clear. Take your own time and copy, my dears. Feel free for any doubt. Testing question. 2-3 time previous year question. Question number 8. 2-3 time previous year question also. Question number 8. Similar to our last question, but last question is a deterministic. Here it is a probabilistic. Let's see. After observing heavy conjunction of customers over a period of time in a petrol station, Mr. Petro has decided to set up a petrol pump facility on his own nearby site. He has compiled the statistics relating to the potential customer arrival pattern and service pattern as given below. He has decided to evaluate the operation by using the simulation technique. So this is the area for what? Arrival. This is for what? Service. Last question, it was given the timing. Here by using random number we have to Fine. Here, very specifically mentioned, the clock start by what? 8 o'clock. Last question we assumed it 00 because the timing was absent. Only one pump is set up. Following are the root to random numbers. So random numbers also given. So the similar to our last question, they are asking first one, probability of pump being ideal, then average time customer send in the waiting. So here, first thing what we have to do, range statement. First thing what you have to do, range statement. For which are all the item you have to do range statement, arrival and services. Then we have to prepare the table like last question. Shall we start? The only difference is that last question the time was given directly. In this question, by using the random number, we have to find out the time. So let's start. So we are discussing which question, my dear friends? Range statement for arrival. Tell my dear friends, 2, 4, 6, 8, 10. What is the probability?
0.22,
0.22,
0.30,
0.34.
0.14, 0.10.
Now we have to complete cumulative. For me, since it is Excel, very easy. Range we have to make of what? 0 to 21, 22 to 51, 52 to 75, 76 to 89, 90 to 99. The same way we have to do range statement for what? Service. Same way we have to do range statement for service. Four, 6, 8, 10. Probability will be 0.28, 0.4, 0.22, 0.1. Total of the probability always P1. So how can you make the right statement, my dear friends? We did lot of questions. 0 to 27, 28 to 67, 68 to 89, 90 to 99. So take your own time and copy, my dears. Yes, now how to proceed, my dear friends? We have to go for the same way. Statement showing computation of ideal time and waiting time. You can give a bracket. Clock starts by what?
8 o'clock.
This is very important. Based upon that, timing will change. First, random number for arrival. So tell my dear friends, what is a random number? See, this is the arrival pattern random number. They have given around 10 numbers. This is we have to use. Which roll the number? 78,
26,
26,
94, 8,
94 like that. Now we have to go for next arrival time. See, last question, arrival time we got it. Here we have to find out. First we have to get inter arrival time first. Inter arrival time. Then we can get arrival time easily. So first you should know what is meant by inter arrival time. So let's start. We have to check the number. What is the number here? 78. So we have to go for corresponding arrival table. Arrival range statement. What is the random number we got it? 8. So 8 belongs to 0 to. What is the random number you got? You got random number 78. You got random number 78. 78 belongs to 76 to 89. You got a time of what? 8. Same way we have to find out the time for similarly. You got 26. 26 now you have to check here. It coming under 22 to 51. We'll get a time of what? 4. So you have to put here 4. If it is 94, again we have to check the table. 94 is coming, 90 to 94. You will get what? Time. So we did lot of question like this. So you are expert on this. You have to find accordingly for rest of the item. How you will get arrival time? 8 o'clock clock starts. Inter arrival is what? 8 minutes. So it will be what? 8. Next customer will be after 4. That is 8:12. Next customer after 10. That will be 8:22. So now you got arrival time. Now we have to go for service start time. What will be the service start time, my dear friends? See, if the customer comes by 8:08, we can start by 8:08 itself. So we can start by 8:08. So what will be the service time then? For that you have to use a random number for service. For that you have to use what? A random number for service. You cannot take directly. What is the random number for service, my dear friends? We have to check the table, the second table. 44, 21, 73, so and so. Now you have to find out service time. See, this is very important. For service time, what we have to look into? We have to check the, not the first table. We have to check the service table. The first random number is 44. So 44 you belongs to 28 to 67. The timing will be what? 6 minutes. Now 21. 21 coming 0 to 27. So the timing will be what? 4 minutes. Next is 73. 73 comes under 68 to 89. It will come what? 8 minutes. So we got a random number for service time. Next we have to go for service end time. How will get service end time, my dear friends? Very easy. See, we start the service by 8:08. Service for 6 minutes. It will finish by what? 8:40. The main timing is what? We have to find out waiting time and ideal time. We have to find out what? Waiting time and ideal time. That is the main point. So let's see how many of you are ready for the same. Waiting time and ideal time. So let's see how many of you ready for waiting. See, your starts the clock by 8 o'clock. Customer comes only by what? 8:08. The petrol staff has to wait. Customer will not wait because your petrol pump will start by what? 8 o'clock itself. Customer comes by 8:08. So petrol staff has to wait how long? From 8 onwards they have to wait. That is 8 minutes. What happened for next case, my dear friends? 8:14 only service ends. Say customer comes by 8:12. Can you give by 8:12? No. Why you cannot give by 8:12? Because 8:14 only the service will end. If the service end, then only you can start. So here it will come what? 8:40. That means customer has to wait for what? 2 minutes. So 8:14 if you start, what is the time for the service? 4. So it will finish by what? 8:18. So if 8:18 it finished, next customer comes by what? 8:22. Customer has to wait, or the petrol pump staff has to wait. Petrol pump staff has to wait. Why? Because 8:18 they finish the last one. Customer comes only by what? 8:22. So you can start by only what? 8:22. So your ideal time will be what? 4 minutes. How you got 4 minutes? 8:18 to 8:22. The difference is what? 4 minutes. Now what time you will finish? You will finish by 8:30. How 8:30? 8:22 you start. 8 minutes work. Hope all of you are clear. Same way, can you do the balance, my dear friends? You can pause the video and try yourself, my dears. Let's see how many of you will get that. Please practice. Yes. So I have given the random number and inter-arrival time for you. Now we can easily complete 8:22 after 2 minutes, that is 8:24. Next, after 4 minutes, it will come 8:28. After 6 minutes, come 8:34. So and so it will change. Service start time. See here, we end by 8:30. You cannot start before that. So you will start only by 8:30. So 8:24 customer coming, and you are giving only by 8:30. Customer has to wait by what? 6 minutes. So 8:30 plus 10 minute weightage, it will come 8:40. So hope all of you are clear. Take your own time and copy, my dear friends. So here 8:40 only you are completing, so you can start by 8:40 only. So 8:28, 8:40. Here will come by 8:46. Customer has to wait. 8:28 customer came, but start by 8:40. 12 minutes. Now here 8:46 only you can start. So 8:34 customer came. Again 12 minute waiting. 8:46 if you start, you will finish by 8:54. 8:52. Hope all of you are clear. Go ahead the same way, my dear friends. You will go 8:36. Then you have to go after 9 minutes. So 8:40. Then 8:46. 8:48. 8:58. 9:06. Going further, 8:36. Customer comes. You finish by 8:52. Again, customer has to wait. So 8:52. It will finish by 8:58. So tell my dear friends, 8:36 customer comes. 8:52 only you start the service. What will be the waiting time?
16 minutes.
16 minutes. Very good. The next time, again the customer comes by 8:40. You can start by 8:58 only. So customer has to wait 18 minutes. You will finish by 9:04. Now next customer comes by 8:46, but you can start only by what? 9:04. Again the waiting time will be what? 18 minutes. Now 9:04 you start, it is 8 minutes. So 9:04 plus 8 minutes, total will become what? 9:12. 9:12 it finish. Again it goes for 9:12. 9:12 you start. 8:48 only previous jobs complete. What is the waiting time, my dear friends? 24
minutes.
Now 9:12 plus 4 it becomes 9:16. Next 9:16 You start by 9:16 only. So what's the waiting time now? 8:58 to 90 means 18 minutes. Now 4 minutes, so you will complete by 9:20. You finish by 9:20. What is the waiting, my dear friends? 9:06 to 9:20, which will be 14 minutes. So hope all of you got the correct. Finally, it will be end with what? 19:26. So what is the total of waiting time?
140.
140 will be the total, and here you will have what? 12 minutes. First, they are asking average waiting time. That is easy, my dear friends. 140 minutes divided by 10 will be 40 minutes. Next, they are asking probability of ideal. Okay, it is not 10, it is 12. Small correction. It is 12 random number we have. It is you have to divide by based upon random number. The last question it was 10 random number. We have taken divide by 10. Here we have 12 random number. So you have to divide by 12. 140 by 12, what you will get? 11.67 or 66. Now, probability of ideal. For that, we should find out total time. The clock starts by 8 o'clock. It ends by 9:26. So 9:26 to 8 a.m. The difference is what? 1 hour 26 minutes. We can say what? 1 hour means 60 plus 26. We can say what? 86 minutes. So what is the probability of ideal? 12 minutes out of the 86 minutes of service. So 12 by 86 into 100. You'll get an answer of what? 13.96%. Hope all of you are clear. You can take your own time and copy, my dears. So hope all of you completed this question. We'll proceed to the last question, which is the question, my dear friends. Question number 4. See, this is your question number 4. A small retailer has studied the weekly receipt and payment over the 200 weeks and following a set of information. The weekly receipts probability, weekly payments probability. Then they have given random number. There is a small question missing is there. You can add those points here. The missing information is that using the following set of random number. Using the following set of random number. So this general point, simulate the weekly pattern and receipt for 12 weeks. So first point, you can short make it. You have to make weekly receipt and payment. You have to assume opening bank balance is what? 8,000. So add the point. Opening bank balance is what? 8,000. Then they are asking closing balance and highest weekly balance. So three things they are asking: weekly pattern of receipts and payments, closing balance end of every week, then average bank balance and highest weekly balance. So this main point you can add in your question. It's missing in the question, my dear friends. We can proceed with the question. So what is the first process, my dear friends? We have to start with random number. Random number purpose, you have to make range statement. First you have to make what? Range statement. So range statement for weekly receipt, range statement for payments. How to proceed, my dear friends? They are asking for closing balance. Opening balance already with you. With the random number, you can get the receipts. With the random number, you can get what? Payments. So how can you get closing balance, my dear friends? Opening balance plus receipts minus payments. You will get what? Closing balance. Can you solve yourself? Try yourself, my dear friends. Come on. Yes. So let's see how many of you are ready. So we'll start with question number 4 only. First, we have to go with range statement now. Range statement for weekly receipts. 3,000, 5,000, 7,000, 12,000. Zero to 19, 20 to 49, 50 to 89, 90 to 99. The same way we have to prepare range statement for what? Payments. We have to go for probability. We have to proceed with the range. How to proceed with the range? 0 to 29. So hope all of you are clear. Now we have to go for what? Statement of weekly balance. What is the opening balance? 8,000. So random number for receipts. Through that you will get what? Receipts. Random number for payments. Through that you will get payments. Let's see how many of you are. This is point number 1, 2, 3, 4, 5, 6. How you will get closing balance? Opening balance plus receipts minus payment. Your opening balance 8,000 we know. So what are all the random number, my dear friends? 3, 91,
38,
38.
55,
Yes, 55 later. 17, 46,
32,
32,
43,
43,
69,
69,
72,
72,
24,
20.
20.
Now, by using this random number, you should find out your receipts. You have to check your previous 3. You have to check the receipts. 3 belongs to 0 to 90. So corresponding receipts is what? 3,000. Like now you have to approach. Now going 91, it coming here. So corresponding receipts is what? 12,000. Like that we have to identify. Since we did lot of here, hope you will get the number. If you go 38, you have to receive here in 6 there. You will get what? 5,000. Like that you have to find out. So hope all of you find out. I'll help you what is the number for the rest of the item. For 55 it will come what? 7,000, 3,000, 5,000, 'Now, random number for payments they have given here. We have to straight away we have to take 61, 96, 30, 32, Now, once you get the random number for payment, you have to go back to our range statement of payment. See, the first number is 61. 61 coming between this number 32, 69. So your number will be what? 6,000. Similarly, if you go next item 96, 96 coming here, you will have a number of what? 10,000. Like that, if you do, what is the answer you will get for each item? 6,000.
4,000, 8,000, 4,000, 8,000, 10,000.
Now, how to get closing balance, my dear friends? Your opening balance plus receipts minus payments. Now, what is your closing balance of the first week? That will be the next week. If you want, you can write here week also. Week 1, 2, 3. If you want, you can write. So now, how to proceed, my dear friends? If you want to get the coming balance, for me, since I am using Excel, I can just scroll down. This is how you have to do. Opening balance plus receipts minus payments. You will get the number. Since I am using Excel, I am just scroll down, my dear friends. We will get the balance. The question is asking 3 point weekly balance. That is we have found out. What is the closing end of the week? They're asking what is the closing balance at the end of the 12 week. So closing balance, you have a shortage of. Similar question you can find in your intermediate also. Now average weekly balance. You have to take the total. 45. How many number of item? If I am not wrong, 12. 375. Next they are asking. If you check the number highest weekly balance. So these are all each week 1, 2, 3. So 7,000 which coming second and fourth week. If you want, you can give this number also. So highest weekly balance will come what? Second and that's all. Question over. Hope all of you are clear. Take your own time and
Yes. Now, thank you, my dear friends. We have discussed not all, but we feel that majority weightage topic. In the beginning, we were discussed the weightage topic. So we were trying to complete all this weightage topic. This topic of your standard costing, networking, activity-based costing. So believe we are able to deliver. So my dear friends, you can what I have to suggest you that you have to follow and prepare very well. So I don't want to prolong the session. So before winding up, I'm just making the additional point that is some friends are thinking, sir, what to do for MCQ. So I'm just sharing how to crack MCQ with the EduHome Connect. We EduHome Connect in our platform, I have to tell you, we are launching with a lot of benefits for the students. So even we have already go with the marathon on FM, and we have session on webinars we conducted like that. In the beginning, I have told you the webinars now. We have conducted all the subjects. So these are all free. Webinar in our website, it's free. You can utilize it. All the resources, MTP or previous assistance, everything you can get from here. If you want anything, if you want MTP, everything you can get from here. Here for MCQ, you can having a better plan here. If you want to go on for our final paper, SCM strategic cost management, we have bronze plan where you will get 1 or 2 chapter MCQ. We are not making any confusion. What is the important MCQ in your study material previous year? We are discussing in this where it is through application benefit, because we are living in a IT era. So you will get all the question, you can attend the MCQ, immediately you will get the answer, you can check what is correct, what is wrong, and after 1 week or 2 weeks. So I am attaching that video also for your benefit. So please watch those video also. So I am signing off right now. So wish you all the best, my dear friends. So we are there for you, my dear friends. So with this strategy, I hope, so back to back session, I'm also a little tired. So we are winding up right now. So please do subscribe our YouTube page, where we are coming with such exciting benefit for your June exam. And we are there for you with until you achieve the CMA. All the best, my dear friends. Signing off, your faculty Asthaf.